that would effectively take away people's liberty rights. When you're in that position, it's an awesome responsibility, and the power that you have is incredible.
This is funny.
You have significant effect on people.
4 years of weaponization, now you bring it up?
And so as much as you might want or have instincts to be political about it, when you're talking about criminal prosecution, you have an obligation as a prosecutor really to look at things in very neutral terms and make sure that you are giving people their due process and using the great force of the United States government and the court system appropriately for the right reasons, which is to enforce the law. Again, I'm not taking a position on whether they should or shouldn't here. It does raise questions about whether somebody is being singled out simply because you don't like their policy positions. If that is the case, then that is an abuse of power in and of itself and is something that raises huge questions about its appropriateness.
And what is your sense in this context? Do you have an early take?
Well, again, you really don't want to prejudge these things. The context here raises questions about, again, whether somebody's being singled out because of their policy positions. If that is the case, and I take no position, I don't know whether it is or isn't, then it's problematic. But taking Pulte for his word, if it's simply an ordinary referral, that's fine, but the Justice Department has an obligation to make sure that it's using its responsibility and its prosecutorial discretion and authority appropriately, not simply in retaliation for a policy position.
All right. Jonathan, it is great to see you. Enjoy the weekend. Thanks again.
Thank you.
Talk to you soon. You bet.
Always great. Bye.
All right, when we come back, the latest shot at the AI talent wars. Meta could be the winner in this one. We have the details next. Right now, though, as we head to a break, check out some of the big tech stocks this morning. You're going to see gains across the board, but the big winner right now is Alphabet. It's up by about 1.2%. Stay tuned. You're watching Squawk Box, and this is CNBC.
Unbelievable. Unbelievable. That's what you are. Unbelievable. That's what you are. And we're going to have a breakout today. I just feel it. Feeling bullish. I bet you folds. That's what you are.
Welcome back, everybody. Two executives in the AI field on the move. OpenAI's chief of human resources will leave the company today after getting promoted to that role back in March. And Meta reportedly poaching another employee from Apple. Bloomberg says that Frank Chu, who has focused on cloud infrastructure, training, and search at Apple, will join Meta's superintelligence labs. He is at least the sixth departure from Apple for Meta. That news comes as the Wall Street Journal ran a report just 2 days ago that said Meta would freeze hiring of AI engineers after going on this big spending spree to acquire top talent. Maybe that deal was signed before the freeze came through. But I guess when it gets down to it, if you see a really great talent and you have a chance at it, you're probably going to take it. And so.
That's what it sounds like. That's what it sounds like. Coming up after this, talking about gambling. That's a sort of a gambling situation. We're going to talk about Gambling Nation after the break, and we're going to speak about the proliferation of prediction markets and sports betting as we close in on the start of football season. Don't go anywhere. Squawk Box comes right back.
C+.
Robinhood recently unveiled a partnership with Kalshi to launch sports betting prediction markets focused on the NFL and college football. It's another headline that's coming out in this arena. FanDuel is going to be partnering with derivatives exchange CME Group on events contracts that are tied to the S&P 500, gold and oil prices. and even economic indicators. Joining us right now to talk about America's relationship with betting is John Cohen. He is the author of 2 books on betting. The most recent was out this year. It's called Losing Big, America's Reckless Bet on Sports Gambling. John, I think it's fair to say this tells us what your opinion is on these things. How do you see the state of America and gambling at this point?
Well, what could possibly go wrong, right? I think the nation has gone all in on gambling really, really quickly just over the last 7 years. And I'm not opposed to gambling by any means. I'm not opposed to maybe even people having access to gambling on their phones. But my concern, and the reason I use the word reckless in the title of the book, is that we've gone in so quickly with so few guardrails protecting people that I think we might be causing unnecessary harm with our sort of new addiction to gambling.
You think this is actually a public health crisis, particularly for young men at this point?
That's right. I mean, 50% of young men, 50% of men between the ages of 18 through 49 have a sports betting app. 60% of high schoolers have gambled within the last year. I think we're getting past the point of, oh, this is about individual responsibility and individual fault, and it's a collective problem, and it needs to be addressed through systemic solutions, which is why I've sort of moved to this public health lens for fixing the issues that we've caused.
All right, let's talk about the Kalshi and Robinhood partnership first, and then we can get to some of the broader ways that you think that these things should be regulated. What do you think of these latest moves?
It's I guess it's not surprising, right? Once Kalshi and Robinhood, as you may remember, tried to get into the sports world first on the Super Bowl of last year and sort of got held up at that point, and then did go in on during March Madness. And what this effectively offers, and what I think is so notable about this, is not in a place like New York actually, but in somewhere like California or Texas, states that do not have legal licensed state sports betting yet, but effectively do through this gray market sort of backdoor of prediction markets. So I think it was sort of inevitable once they went in on sports in general on Kalshi and Robinhood that we were going to get to the NFL, we were going to get to NFL point spreads, we're probably going to get to parlays, and this is if there's going to be anything that really truly disrupts FanDuel and DraftKings at the top of the sports betting market, it's going to be Kalshi, it's going to be Robinhood or Polymarket when it comes to the U.S.
Kalshi says that it's only beholden to the CFTC. You think that's the case?
They certainly seem to think so. Lots of states have sort of taken up this issue and have claimed that Kalshi and Robinhood are offering gambling, and as a result should be responsive to state gambling regulators, not just to the CFTC. So I'm not a lawyer. I'm not going to sort of comment on whether they're correct on the merits. But it sure seems to look a lot like gambling, and if it is gambling, then by my account, it should be regulated by states in addition to possibly the CFTC.
You know, it's not just puritanical people who are thinking some of these things. The American Gaming Association CEO has some choice words for this too. The industry is already pretty heavy regulated, and I think they're a little angry that, you know, I think his words were something like, if it looks like a bet, if it acts like a bet, then it is a bet, and it should be regulated.
That's right, and the black hole or the loophole that I mentioned is claiming that buying, you know, a bet on the Jets point spread is somehow an investment and somehow a contract or an option rather than just a gamble. And it, as you said, it clearly is just a gamble.
Do you think some of this was brought about by the pandemic when everybody was kind of locked up at home looking for something to do? In some ways, we saw a lot more meme stock activity, a lot more retail trading that was taking place in the markets. But you also saw a lot of this gambling that really took off, and maybe it got a foothold then.
Absolutely, and I think I've talked to a lot of folks who get into sports betting or get into prediction markets, not actually through sports, but through things like Robinhood, and they sort of develop a gambling mentality, or maybe even crypto too. They develop a gambling mentality, and that leads them, oh, I'm looking for something new to bet on. That brings them to sports, that brings them to prediction markets. Oh, now all of a sudden they're betting on what Mr. Beast will say in his next video or something. And I think you're right, that from a cultural perspective, that really, really took off 2020 and 2021.
You know, good luck putting the horse back in the barn at this point. You have now seen not only major companies that you wouldn't have anticipated get involved with this, like a Disney, but you've seen all of the leagues, even the NFL that was so standoffish and so didn't want any of this to happen for the longest time, embracing at this point because they figure you got to go along. Society seems to have moved this direction. Is it too late to stop any of this?
I think it's too late to, as you said, sort of put the horse back in the barn or put the genie back in the bottle. But I don't think it's too late to get things right and to get things better and to make things safer and to add some guardrails.
So how do you do that?
Okay, so there's lots of ideas, and some of which have not been tried yet, because lots of states, as we've already been talking about, really have sort of gone all in and have not put these guardrails. But I think measures like limiting the number of deposits someone can make within a certain period, making it easier for someone to withdraw money from the website, making it a little bit harder to deposit money. My byword for all this is friction, and adding friction to the platforms, making it not impossible to bet, not even difficult to bet, but really difficult for someone to bet casually on the Cubs to win, and then to get mad and lose more money and lose more money, and for that to be sort of the snowball that starts on a path.
Is there anything wrong though if somebody's betting $5, $10, $15? I mean, I would cite the example of our co-anchor Joe Kernan, who has fun with it, and he really, he went for many months with just a couple $100 in the account and not renewing it at any of those. Like, what's wrong with that?
Nothing, and 60% of NFL bettors account for just 1%.
You have to have income stratas. I mean, I think of the difficulty of even trying to figure out how much is too much for somebody. If you make more money, then you can play around a lot more. You think of like what Michael Jordan and some other athletes do it for entertainment. They had a lot of money.
I think it's sort of a when you see it. It's like, okay, it's one thing if you're gambling on the NFL or an NBA game. It's another thing if you're gambling like I did last night on a Czech table tennis tournament and who's going to win the 7th point of the 3rd game. That to me is like, okay, you're not augmenting your experience with sports.
You're a gambling addict?
I'm not a gambling addict. I just did that to say that I did it when I came on TV. But I think that you're clearly at that point not augmenting your experience with sports. You are chasing a high and sort of chasing a dopamine delivery through gambling wherever you can find it.
I agree with you on this idea that it's not great for society. I've seen what it can do, the damage it can do to people, friends and family. However, I don't love what you're saying I know it when I see it, because if I'm a business and I'm trying to figure out how to navigate the law, that is the worst possible thing you can say.
Fair enough, and I don't want to sound like some big nanny state liberal that Congress needs to come in and tell Congress what to do. I know, but I do think that companies could self-regulate, and I think right now the problem is that there's no sort of incentive to do so. It's if DraftKings were to kick you off their platform, you're just going to move over to FanDuel, and then you're going to move over to BetMGM, and then you're going to move over. So
industry standards maybe rather than congressional set sort, but with the threat of Congress saying if you don't regulate yourselves, we're going to regulate you.
I would be thrilled to see that. I mean, as you may remember from the tobacco and alcohol industries, I'm not sort of super confident that those regulations are going to be stringently enforced or that are going to do a lot for player protection. But maybe I'm still naive, but I still think the industry has the time to get it right and can do it itself rather than wait for government to come around and fix it for them.
Jonathan, thanks a lot for joining us. It's a thoughtful conversation.
Thanks for your bet. Good luck with your bet on the Czech table tennis tournament.
Wow.
I'm out.
I feel like there's probably a lot of cheating going on once you on these
that's
smaller
the bigger
sports.
question. As a sports fan, I don't love the idea that there's big money that really matters on every play that comes down. And you can say it's naive. It's been there. There's been betting
for the
behind
smaller
the scenes
sports,
for a long
the ping
time.
pong in Czechoslovakia, yeah.
Right.
Okay, it is just past 7 a.m. on the East Coast. You're watching Squawk Box right here on CNBC. I'm Andrew Ross Sorkin along with Becky Quick. Joe is off on this Friday morning. Among today's top stories, yes, it is the countdown to the main event of the week, of the month, maybe of Jay Powell's career. We'll see. Federal Reserve Chair Jay Powell is going to be delivering the keynote address in Jackson Hole today. Of course, that is the Kansas City Fed's Economic Symposium. Happens annually in Jackson Hole, Wyoming. It's going to be Powell's final speech headlining that conference in that role. Of course, he passes the baton in May, and there's questions about whether there's a shadow Fed chair in the offing sometime soon, if not already, just without a name. The speech expected to begin at 10 a.m. Eastern Time. CNBC is going to have full coverage all day long. Steve Weissman in the Tetons, the Grand Tetons, this morning with us. Meantime, NVIDIA has now asked some of its component suppliers to stop production related to the H20 chip. That's according to a report from The Information. China is said to have pushed for domestic tech companies to hold off buying the chips over security and other concerns. The H20 less powerful than the company's highest-end processors, raising all sorts of questions just about the break between the U.S. and China and how this is all going to work. Meantime, Meta has agreed to spend more than $10 billion on Google Cloud services over the next 6 years. That's according to people familiar with the matter who spoke to CNBC. That deal is said to mainly concern infrastructure for AI. Nobody can get enough of it, neither can Meta, and they're going to do it, in this case, at least a little bit, with their competitor.
Major averages all closed lower yesterday. It's actually been 5 days in a row that you've seen lower markets for the S&P 500 and 3 days in a row for the NASDAQ. The NASDAQ's actually on pace for its worst week since all the way back to May. But this morning, there are some green arrows. Check it out. Dow futures are up by just over 140 points. S&P futures up by 15. The NASDAQ up by about 50 points. Probably worth pointing out that even with the pullback we've seen after 5 down days for the S&P 500, you're still talking about the S&P above 6,300. So pretty lofty levels and pretty close to all-time highs for all 3 of these major averages. Treasuries are in focus today because that's where you would probably see the biggest reaction potentially from anything Fed Chair Jay Powell has to say today. The 10-year Treasury yield is a little higher. It's at 4.33. The 2-year is at 3.79. And then let's check out gold prices as well. Right now it looks like gold is down by close to $10, $3,372 an ounce. Finally, crude prices. Crude oil is at 63.54 for the 1 year. It's still down by about 13%. Let's get over to Frank Holland. He's got a look at this morning's pre-market movers. Hey, Frank.
Hey, good morning, Becky and Andrew. We're going to start off with an earnings mover this morning. Take a look at shares of Intuit. You can see they're pulling back more than 5.5%. This is despite better than expected earnings. It's really guidance that's sending the stock lower. Its quarterly revenue forecast, those came in below estimates. The company said that its marketing platform, MailChimp, is contributing to that drag on revenues. Again, shares of Intuit pulling back just about 5.5% right now. Ross Stores moving in the other direction after the discount retailers' earnings after the bell yesterday. The retailer saying it's a lower than expected tariff-related cost, very different than some other companies we heard from, like a Target or an Estee Lauder, but it's still maintaining a somewhat cautious approach. The company also saying it's seeing improving trends when it comes to back-to-school spending. Back to school coming up in just a few weeks. Shares of Ross right now, they're up just about 2% year-to-date, pulling back about 2.5%. Also looking at Workday, falling further in the pre-market despite earnings that beat on both the top and the bottom line. Shares of Workday pulling back more than 5%. Subscription revenue, that failed out. The outlook there failed to impress investors as it was mostly in line with estimates. The company's CEO also warned of demand pressure from education and government sectors amid spending cuts. Shares of Workday, they're pulling back about 5.5%. And finally, Roblox, seeing a nice bump this morning after an upgrade from Wolf Research. Analysts there seeing more upside for advertising opportunities, saying the company has, quote, long runway for durable growth. Another possible catalyst also looms. Roblox has its developers conference coming up in the first week of September. Shares of Roblox are up more than 2% right now, but year to date, you see this huge number. Shares are up more than 170%. Back over to you.
All right, Frank, thank you. We will see you in just a little bit.
Coming up, a check on the tech sector on this Friday morning. Some of the mega cap names having a bit of a rough week, from Nvidia to Alphabet. Is this a slow-moving tech wreck or a buying opportunity? We're going to get into that after the break-in. The U.S. Open has arrived in New York City. Tennis fans flocking to the event, and prize money for players has never been higher. Former tennis pro, coach, TV commentator, friend of Squawk, Brad Gilbert, is going to join us this morning with his predictions. And yes, we'll talk about his stock picks as well, as we always do. Squawk Box, come right back. Welcome back, Squawk Box. NVIDIA's highly anticipated earnings report is going to be released next week. The stock, though, down more than 4% this week. Its worst week since mid-April. Several other mega cap names also sliding over the past couple of days. Joining us right now, Paul Meeks, Freedom Capital Markets Managing Director. Good morning to you. Let's start with the NVIDIA news, what you expect next week. Also, what you make of some of the news that we've been talking about just this past 24 hours about this H20 chip. And whether actually it's really going to be sold into China at this point. I think there's some real questions about that.
So first of all, the quarter, I think the quarter will be another meet and beat. The only problem that I have, or the only cloud that I see, is of course what you've already talked about earlier in today's program, which is what's going to happen with China, right? We have the H20, it was on again, off again. We have this reverse tariff of 15% that should be charged or may be charged to both NVIDIA and AMD. And now, of course, we have NVIDIA in negotiations to sell one of their higher powered chips to China. Of course, what will the restrictions on export controls be there? So all this, unfortunately, is a question because it all gets into overall the big negotiations that continue now for an extended 90 days between the U.S. and China. I think they're going to finally strike a deal that is going to be the biggest of all big bundles, includes all this stuff, including other things like who is going to take control of TikTok here in the U.S.
You know, we had a conversation with Sarah Fryer from OpenAI this week where we said this is either a gold rush or a sugar rush. Sam Altman, just about a week ago, said that we were in a bubble. We may be in a bubble, Paul. Are we? And if we are, where in the cycle of the bubble are we so that if you want to get in or out, you know when?
Yeah. Well, we've heard the bubble fears for a long time, right? Remember earlier this year when DeepSeek out of China was out with their cheaper, supposedly more efficient model, and people are calling for peak AI back in early 2025. So yes, we're spending a lot, and yes, in any tech wave, you're always going to have a ending oversupply. But the way I look at it, when you talk about the timing, I still think that we're not close to the end. I still expect strong AI infrastructure building spending this year and even 2026. So I am not necessarily worried about the collapse anytime soon.
But is that a 2-year program? Is that a 5-year program in your mind? Because it also has to do with the multiples that are on these stocks.
I actually think it's clear sailing, at least through next year. But when you take a look at some of these companies, a la, the flagship NVIDIA, when you take a look at a PE to growth, sometimes you see companies of this ilk, this quality, with a PE to growth rate of less than 1, less than 1.5, clearly less than 2. So by that metric, they're not necessarily egregiously overvalued.
Of all the Mag 7, if you will, I don't know if you want to add some others into that, what do you like and what wouldn't you touch?
So I do not like Tesla, never have. I'm also a skeptic of Apple. I think the problem is no growth on the top line and also a squeeze on their costs as they manufacture more in the States. Every time Apple has an announcement about domestic manufacturing of some sort, shareholders should take that as a bad sign. I still like, among the Mag 7, Microsoft, though I think it's a little bit expensive, but I would buy here Meta and Alphabet and Amazon. But my favorite stock, Andrew, out of all the larger tech companies is AppLovin.
I still think of McLovin every time somebody says that too. Explain AppLovin, why that's your favorite, but then also why those three. What would you say, Meta? Forget about Microsoft, but the other three that you like the most in the Mag 7.
Well, I think there's upside in some of those other three, or the subset of the 3 of the 7 Mag 7 stocks. for a while, Alphabet had really lagged. You know, it actually had lagged not only the Mag 7, but the S&P 500 before their last quarter report, which I thought was pretty strong. And so I like that on a relative valuation basis. You know, Amazon took that hit last quarter when their Amazon Web Services were a little bit disappointing, but I'll think they'll be fine. And Meta, you know, Meta came under some pressure this week because they announced that they're going to at least stop, you know, paying this outrageous fees for AI talent. I don't necessarily think that means that the AI goose is cooked. So I still like those, but AppLovin, here's a company that's taking on a new market that has a huge opportunity. They only have a small fraction of it, so I like the potential for revenue growth acceleration. And also the company divested a lower margin business, and so they're left with a pure play in digital advertising with a EBITDA margin of well over 80%. So that is a rock star profile for profitability with accelerating growth with reasonable valuation. You don't see that in many tech companies these days.
Paul, we're going to leave it there. We appreciate seeing you on this summer Friday.
Yes,
Thanks
sir.
again for joining us. You bet.
All right, coming up, Jeep trying to jumpstart sales, an iconic American brand bringing back one of its iconic models. Jeep CEO will tell us about the return of the Cherokee. Bring back the Commander, that's what we really want. Plus, the impact of tariffs and much more. We'll get to all of that next. Squawk Box will be back in just a moment.
Time now for today's Aflac Trivia question. Who was the first president to ride in an electric car? The answer when Squawk Box returns. And now the answer to today's Aflac Trivia question. Who was the first president to ride in an electric car? The answer, President Theodore Roosevelt. The car was a Columbia Electric Victoria Phaeton, which had two 20-volt batteries and a maximum speed of 13 miles per hour.
All right, that was a total trick question. I was thinking it had to be like Obama, somebody really recent with EVs. Good question, because you got us. All right, welcome back to Squawk Box, everybody. Phil LeBeau joins us right now with the CEO of Jeep and a big unveil. Phil, did you know the answer to that question? Who was the first president to ride in an electric vehicle?
I didn't. I had an idea, but no, I mean, that did not, Becky, to be quite honest with you. Bob Broderdorf, the CEO of Jeep, is with us here. We're down at Domino Park, where last night they unveiled the new Jeep Cherokee, which is back here behind me. This goes on sale later this year. Wildly important for Stellantis and for Jeep. When you look at this, how important is it that you have a mid-size SUV back on sale again?
Yeah, there's no question. This is the biggest segment in the United States, and bringing this back into our portfolio is a perfect fit between the Compass and the Grand Cherokee. And this is obviously one of the largest misses from our sales decline that is now going to help reinvigorate a positive direction for us going forward.
Did you let the lineup get stale? Is that the problem what we saw over the last 6 years as Jeep sales declined?
I would like to think that the speed at which we had new product introductions, I think, is a better opportunity for us. And you're going to see us bring 4 new products in just the next 4 months and continue to attack. The second piece really comes down to the offerings of key content. Too much of it got locked away and made it too difficult for customers to afford things they really wanted. And in just the last 6 months, we've unlocked that.
But when you say it gets locked away or did get locked away, what do you mean?
So oftentimes what you'll see manufacturers do is they'll bundle a couple of pieces of content together. So now it's simplified in the lineup, but now you've got to get 2 or 3 things that the customer may not have wanted originally, and many customers have asked us to sort of unlock those features. Things like, I only want to buy steel bumpers because I want to go off-road. Why would steel bumpers be locked away or attached to 2 other features I didn't want? We've unbundled those to bring the prices down to get the features you really want.
When you look at this vehicle being built in Mexico, there's tariffs right now, and nobody's quite sure when there's going to be a new USMCA deal or when we'll finally get a deal with Mexico. How much does that impact your costs?
Costs are certainly going to be impacted by tariffs, but obviously being a global brand and having multiple nameplates at the plant, it allows us to be very, very flexible. And on top of it, when you talked about just being compliant, the entire powertrain is built in Dundee, Michigan. So we've worked through different parts and components. We've got a value equation where we still can price very aggressively for the customer and allow really a great proposition going forward.
You were going to start the base in the mid-30s, but that's not coming until next year. The first ones will be well over $40,000. How much is pricing a resistance factor right now, where you are finding customers who are saying, whether it's because of bundling or other factors, they're saying, I'm not comfortable paying $750 a month for an auto loan right now?
Yeah, there's no question. I think customers have felt the squeeze in general across everything that we buy. So we've brought that price down into the mid-30s, and they're going to be able to order. They can go in and order now cars under $40,000. So the first lineup that's coming is the limited. That's just the first batch. But the entire rest of the lineup and the very affordable products are available right away.
You became the CEO of Jeep earlier this year. When did the dealers start telling you right off the bat, change the pricing? We're getting hammered and it's hurting sales.
Yeah, I think our dealers were clearly pretty vocal previously, and pricing was a part of it. And they need that throughput and the consistency from Jeep in order to be really the staple of their lineup. So for us, pricing had to come down. We've re-racked the value equation. We've re-racked nearly every Jeep that we make. So I think if you shopped us in the last 6 months or a year, we have a very different value proposition for our customers.
This only comes as a hybrid. Is that the way we're going now, where pretty much hybrids are going to be standard for most vehicles? I mean, you still want a Hemi and you came from Dodge, you still want that Dodge Hemi, you can still get it. But generally speaking, on some of these mass market editions, hybrid is pretty much going to be it.
Yeah, look, hybrid was the perfect piece to round out the rest of our portfolio. We've got best-in-class selling plug-in hybrids with plug-ins with the Wrangler and the Grand Cherokee. We've just launched our new BEVs. We got another BEV coming with Recon. So the missing piece to give our customers the freedom of choice they're looking for is a hybrid, and we've brought it to the biggest segment there is.
Bob, Becky's got a question for you. Becky, go ahead.
Hey, Bob. Thanks for joining us today. I just have one question. Bring back the Commander. When are you guys going to do that? That was my favorite. I loved that car. You guys discontinued it in 2010. Are there any plans to ever bring that back? It's great, it's boxy, it's big, it had a third row seat, loved it.
Yeah, the Commander was a phenomenal product. People just absolutely fell in love with that historical boxy design, and the third row was certainly impactful. Since then, we've come out with the 3-row Grand Cherokee as well as the Grand Wagoneer in a couple of different flavors. So that's how we've approached it. The Commander is something I'll certainly take that under advisement, and we'll see if we can find something for you down the road.
Okay. And by the way, we do have a Wrangler, but that's for that. You know, the Commander was I held onto that car until it fell apart. It was so great. I miss it.
Well, I appreciate that we got you in a Wrangler. That makes me very happy to hear that.
Bob Brodendorf, the CEO of Jeep, thank you very much. Hey, Becky, you should also know last night LL Cool J was performing. A couple of the Jeep dealers came up to me and they said, when is Becky going to come into our dealership when she wants a Jeep? I said,
we have one.
I didn't tell him you wanted the Commander, but I said I would pass it along.
Well, it's true. The Commander, you knew that, Phil, that I wanted the Commander back?
I've probably complained about it so much.
Yeah. Yeah, I love
you
it.
Have.
Anyway, that's awesome. Thank you, Phil. Thank you, Bob. It's great to see you both. Okay, see you later.
Thanks so much for having me.
Coming up, another iconic brand is under fire. Cracker Barrel's new logo and rebranding plan facing some sharp criticism, but is the backlash overblown, or is this a new Coke type of marketing blunder for the Southern-styled restaurant chain? That's coming up on Squawk's menu after this.
Famous the bull.
Welcome back to Squawk Box. Take a look at the futures on this Friday morning. Got some green on the screen. 130 points higher on the Dow. Nasdaq up about 36 points. The S&P 500 up about 12.5 points. We'll show you treasuries as well right now. You're looking at the 10-year and the 2-year. We might move all that around when Jay Powell speaks at 10 a.m. Eastern time this morning. He's in Jackson Hole, this being his last major speech, maybe giving some direction as to where things may go this fall. The 10-year at 4.3, the 2-year sitting, well, I think we just lost that there at about 4.2, but Bitcoin now at $112,000. When we come back, we got a big one. We got a big shot at the table. He's already sitting at the table. We're going to serve up some tennis. The city getting ready for the U.S. Open, getting underway in Flushing, Queens, just a few miles from Times Square, and the stakes have never been higher. This year's purse, the biggest in tennis history, $90 million. Former pro tennis player, coach, TV broadcaster, friend of Squawk. There he is, but looks even better in person right here. Brad Gilbert's going to join us with his picks for the tournament. And yes, we'll talk about his own stock picks as well when we return.
Stocks.
Welcome back to Squawk Box. Tennis taking over New York City. This is the start of it. The U.S. Open starting next week. Players compete for the biggest payday in tennis history. $5 million for the men's and women's singles champion. Fan Week and mixed doubles competition kicked off this week. For the latest, I want to bring in former tennis pro coach Brad Gilbert. It is great to see you at the table, sir.
Good morning, how are you? And Fan Week has become massive. They had 78,000 for the 2 days of mixed doubles, Tuesday and Wednesday. So obviously they played that this year much earlier. They'll have well over 150,000 for the Fan Week. So this
Even in the lousy weather this week, everybody turns out.
Yeah, amazing. See, this used to be a 2-week tournament.
Right.
And now it's become completely a 3-week extravaganza. And it literally starts on Monday. And now the tournament this year, for the first time, the main draw starts on Sunday. So an extra day, 15 days. and they'll draw over 1 million fans for the tournament.
Is this why the prize money is so much bigger? I know the players have been wanting more prize money, but it seems like if you're getting bigger, you're getting more fans, they should get their share of it.
Absolutely, and we added a 15th day, which obviously makes the tournament go into 3 weekends, more TV revenue, more sponsorship dollars. So definitely the players got a little bit.
From the players too.
Absolutely, and I think it will continue to go up.
In terms of these big purses, how does that change the game, if it does at all?
You know where it changes, Andrew, is for players that are lower ranked,
Right.
who are struggling, week in and week out, and when they get into the majors, it makes a difference for them for the next 6 months. For the players at the top, it doesn't change it. Obviously, whether or not you win 3.6 or 5 million,
I'd like 5 more.
everybody would. But obviously, the players at the top, they're making way more money off the court, so
Sponsorships,
they're doing fine. But the fact that they've raised money dramatically in the first few rounds, in doubles, in qualies, makes a difference to a lot of players.
Okay, so who are you picking this year? What
Well,
is gonna happen here?
let's start on the men's side.
Okay, because we, by the way, have a lot of gamblers who like to
Yeah, I
bet on
watched,
this.
yeah.
There's a guy named Joe Kernan sitting
No,
sits in your
I
seat.
watched the gambling this morning,
Okay.
and you cannot beat the juice. 10% VIG, listen, if you win 55% of the time, you lose money. So good luck betting week in and week out, but I do understand the numbers.
Okay.
I'll give you a simple
Tell us.
number. Sinner and Alcaraz,
Okay.
if you bet on those two guys, they would be about minus 500, and that's if you get the other 126 guys, including Djokovic. They've won the last 7 slams, so they are a massive favorite. And if Sinner probably is about plus 130 just to win it by himself.
Wow.
So I think Sinner, Alcaraz are a huge favorite. Obviously, Djokovic is basically only playing majors at the moment. And we have 2 Americans after that. I think Ben Shelton's had a great summer, so maybe you want to take a flyer on him. He's close to 30-1, and Taylor Fritz got to the final last year. On the women's side, Swiatek is all of a sudden playing way better. Coco Gauff is the 3rd favorite, and we've had an American woman in the last 4 consecutive Slam finals. Look for that to happen again.
Okay, hold on. We got a shot at Coco. You used to coach Coco.
I did.
So she fired her coach. I think she might have fired you at one point.
It happens. If you're in this business long enough, you get the hook.
But she fired him a week before the tournament, which is kind of weird.
Well, she was struggling a little bit. She's looking for a little bit of lightning in the bottle. And sometimes, in tennis, it's not like you have teammates, you have a gentleman. If things aren't working, you make a move.
Has it ever been a situation where a coach has come in literally like at the last minute and somehow juiced and changed the whole dynamic for a player?
Yeah, it's happened definitely a few times. It's like a new relationship sometimes. It's not sometimes what the coach says. It's just a new voice can help. And if you're not feeling it, you're struggling it, we're in a results business, you can get the hook.
By the way, what are those conversations like? It sounds like you've had a whole bunch of them. You got in a lot of the good conversations where they call you and say, I need your help. And then invariably when things go sideways, they say,
they love you when the results are good.
Right.
And, it's like a stock
But
analyst.
they also know that you're going to be talking about them on television when it's all over.
One thing is really important. I'm sure you guys heard. You got to have thick skin, and you got to have confidence that what you're doing. When I'm coaching, the greatest thing about coaching is you're trying to help somebody fulfill their dreams, try to help them become better. And you don't win the match, you don't lose the match, but you're really trying to help them get to another level. And that's your whole goal. And sometimes when the results aren't exactly what the player wants,
Right.
And players now, we grew up in a completely different era. When I grew up, there was no social media, there was no cell phones, no computers. So now so many of these kids have grown up their whole life with that. So they make changes a lot sooner. But one thing's for sure, if you're not playing tennis, you need to be playing tennis. If you play tennis 2-3 times a week after you're 35 years old, for the rest of your life, you'll live 9.7 years longer than everyone else.
Wow.
And in the last couple of years,
Her ghetto's empty. Play tennis.
26 million people play tennis in the U.S. That's up a couple million from a few years ago.
How many people play in pickleball?
That's what I was going to say. What's the competition?
Pickleball is probably somewhere between 7 to 10 million.
Okay.
I play a little bit of pickleball, but pickleball is a lot harder on the body, a lot more jarring moves. But there's room for both. But obviously, there's no pickleball events that have a buzz like the U.S. Open or any major tennis tournament.
We're going to talk maybe about your stock picks in a second, but I'm curious just about companies and brands that are associated with the U.S. Open, or even the players these days, and how much of a boost do you think they get? You know, obviously, you always see the Rolex sign in the back.
Chase.
There's Chase,
Heineken,
and then there are the brands on the court, which is, you know, Nike's there. I don't know how much Nike's investing in tennis anymore. Rogers tried to get into that space.
I like that stock.
I don't know if you like that stock.
I only like that stock because of Fed.
Okay, the ASICS folks. I don't know, like in the old days, you'd see, you know, ads for Prince tennis rackets. You don't see that anymore.
IBM. I'm trying to think.
Yeah, I mean the big sponsors like Chase is the most prevalent on the court.
Right.
Heineken, Rolex. You don't see so much of the tennis manufacturers because the price to be having, you know, a little real estate on the court is not exactly cheap. So they're big companies. But I really do believe that with 26 million people playing tennis, the sport is in a healthy place. I have a tennis shop for 20 years in Marin County, and we're 80-20 tennis to pickle.
Okay.
And a couple of years ago, it was 100-0.
Which of the brands are winning now in that space? Because I think they're probably very different than they were 15, 20 years
You
ago.
brought up Prince. They used to be a player. They're dead and buried. But Wilson and Babylon probably are about 85 to 90% of the rackets. ASICS, Nike, On, Wilson shoes. Shoes are, everybody's foot is different. I always tell somebody instantly when you try on a pair of shoes, they don't feel right, throw them back in the box. As you get older, your feet get wider. So feet are really important. And, it's like one of those things you don't tell somebody, this shoe is perfect for you unless you try it on. But rackets have gotten lighter, smaller grips. Tennis is constantly innovating.
Smaller grips? What do you mean?
Smaller grips, big time. When I was a kid, everybody played with bigger grips, heavier rackets. There was no kid options. Now there's great kid options. So now, like a normal size grip way back in the day, 4 3/8, 4 1/2. You see a lot of pros playing 4 1/4, 4 1/8.
Maybe I gotta get a smaller grip going. Okay.
And you see it in baseball, smaller handle, so lighter, easier to maneuver, easier maybe to change your grip to get a little more spin. So it's constantly changing, and lighter is definitely better on your arm.
Brad, I take it you don't gamble on any of these because you said, gambling, you're never going to win. You're going to hit 55% because of the vigorous. You're never going to win on that stuff. So you stick to investing, not gambling, right?
Absolutely. I mean, I used to bet, but then way back in the day. But obviously, tennis has become huge in betting. So I said the juice is about 10% in football.
Yeah.
In tennis, a lot of the juice is 30%.
Right.
So
That's that game.
People love to bet, but the house is always going to win.
Right.
But I understand numbers. I'm a numbers guy.
We know that you also play the markets.
I love the market.
We got some of your picks here. By the way, we're talking about On sneakers. There's also On semiconductor. I don't know if they got that right.
I am definitely not on semiconductor.
Okay.
I am on sneaker.
Okay.
And that
Trying to
one
make sure, guys.
I like
flip the board.
Okay, get rid of on semiconductor.
Yeah, that's totally
so on. I like to buy and sell.
Okay.
When it gets a certain number, I sell.
What's that number?
Low 60s.
Okay.
And then I sell. So I've bought and sold that a lot the last 3 years. One that I constantly hold the last 10 years.
When do you sell, by the way? What's the? You said you when you're buying and selling On. You said 60 is the low for you.
No, 60 around. When it gets around 60,
Yeah.
I sell.
Okay.
And then now it's dropped to 44.
See,
I'm buying back again a lot.
Okay.
So it has a up and down margin. Microsoft is the new bank. I've been telling my kids for the last 10 years, park your money at Microsoft. Anytime it dips, buy. I wish the dividend should be a little bit higher, but it's still a great place to park your money. The banks are a scam. You park your money there.
You mean checking and savings accounts?
You get no interest, and if you want to borrow, good luck on that.
Right.
And hopefully we don't have the savings, scandal of 2008. I actually am a little worried about that with this guy Powell. Thank God I'm on after doom and gloom today. Another one I love is Nvidia, which I think is another one. It's bounced down a little bit. Great buying opportunity. Another one that I've gotten really interested over the last few weeks because of David Faber, a brain, a genius, is P-Sky. I think that's I think there's a great opportunity in that space.
By the way, that stock was up 14.7%.
Yeah, it was yesterday.
Now, some are speculating. Barron's has an article wondering if it's a meme stock at this point because
it is not a meme.
That was Barron's. That's what they said.
The Ellisons are a meme stock. I'm not buying that.
So quickly, there was no reason for it to be up 14.7% yesterday, or no.
Maybe it's because of the brain, David Faber. But there's a great buying opportunity there in that space. That stock was $100.
Yeah.
So it's come way down. So I do like to trade a little bit, but my core holdings, are stocks that I like. Literally, I will never sell Microsoft.
It's funny you say that because Bill Gates sold most of his stake. You have more faith in Microsoft than he has had.
Well, I think first of all, it's a great company. It's everywhere in the world. It's going to continue to grow. They're going into AI. They're innovating. They got ridiculous market, but like in any business, I don't think they're satisfied. They're constantly trying to evolve and get bigger and stronger, and trying to get to a younger audience. I like Nvidia. I wish I would have gotten in a lot earlier. I really jumped in April last year when I sold my on when it did well. I went all in on Nvidia. Now backing on. So I do like to day trade sometimes.
Okay, final question coming from a very astute viewer. This is not about stocks, actually. This is about tennis again. What do you make of the mixed doubles sort of controversy that's been taking place? This idea that, the folks who play doubles all their life should be the ones playing this, not the single stars sort of encroaching on their space.
I'll stand up.
Yeah.
And I'm going to give a golf clap, bravo. Mixed doubles event was dying. The second week, if we played on the final, they had to literally give tickets to people to see 4 doubles players play. I know they play really well, but since we had singles players play, we had 78,000 over 2 days. It was a massive hit. And the defending champ, the only doubles team that they did let in, did win it. The prize money for 24 for the winning team was 200 grand. You know what the prize money was for this year? What? For them winning? $1 million.
Okay, so you have no sympathy, it sounds like, for the double.
-0. And listen, the event was a huge success. Hopefully they will expand it a little bit more. So they did let 1 doubles team in. Maybe they let 4 in next year. But if we get in a situation where there's only doubles players that are playing on the Wednesday night, ticket holders are going to say, you know what, I want to see stars. That's a problem like they have in pickle, that they only show doubles, don't show singles on TV. That's my 2 cents.
You don't like pickleball, do you?
I like pickleball.
You sound competitive. It sounds like you're protecting your turf with tennis, even though your tennis shop sells some pickleball.
You know who I used to coach for 8 years, Andre Agassi?
Yeah.
He loves pickleball. He plays every day. I like it, but honestly, when I play, in tennis I know my limitations.
Yeah.
Pickle, you warm up in about 30 seconds, you're playing. And the next day, I tell you, get up,
you feel
back.
It's a smaller.
Yeah, because it's all small motions, it's a hard court.
No, and you make these flying moves. You got to stop and slam on the brakes for the kitchen. I like the game, but I'm also a true believer that there's complete room for both. I'm not like a pickle hater. I'm not like a tennis person. Oh no, there's not. There's complete. If I had a club, listen, I'm having both businesses. I have a tennis shop. Why would I exclude pickle?
Right.
I say, come on in.
Sit back down. You're making the camera people nervous.
Okay, why am I making...
Brad. We're going to say thank you. What a fabulous interview.
I appreciate it.
Have fun
Come out to the tennis.
We'll be out there.
We love
be
having
out
you in
there.
studio.
Thanks.
Thank you. I appreciate it.
When we come back, a lot more on Squawk Box this morning. In the next hour, DreamWorks co-founder and longtime Hollywood executive Jeffrey Katzenberg teaming up with Kimball Musk, CEO of Nova Sky, the drone light show company that is lighting up the entertainment world. They're going to join us this morning. You don't want to miss it. 8:10 Eastern Time. Squawk Box coming right back.
come back, the Cracker Barrel backlash, the overhaul of the restaurant chain's logo and rebranding sparking outrage online and a sell-off in the stock. Can the company overcome the marketing mishap? We're going to get into that next. Squawk Box, we'll be right back.
NBC Plus.
Welcome back to Squawk Box, everybody. Cracker Barrel's new logo and $700 million brand overhaul sparking some backlash from customers and critics who say the company is abandoning its country roots. You see the old logo on the left there with the older gentleman, the Cracker Barrel kind of leaning back into things. The new logo, yeah, to put it politely, looks pretty bland. The stock did fall about 10% yesterday. Joining us right now with more on what's turning into a major branding blunder is Americus Reed, Wharton School Professor of Marketing. Americus, let's walk through this and talk this through. I am not a huge fan of the new logo. I think it's boring. Don't know what I think about the stores as much. The white doesn't bother me quite as much. But it does look like they mishandled this pretty badly and it got picked up by social media and uh-oh, now what?
Yeah, I love that point. I mean, social media is outraged about this. I mean, you can take a look at the new logo and you can determine quickly that it's an attempt to simplify, which is a trend that's going on right now. In other words, a minimalization of what you're doing and a modernization to make things a little bit less cluttered. Now, of course, there are, let me just give you quickly sort of rebrand or logo change 101 marketing. You definitely want to tweak a little bit. That's point number one. Point number two is you want to make sure that along with the change, you have the story ready. In other words, you have the narrative prepared to tell consumers why you're doing this and what's behind the change. And so if you don't do that, then you can see what we're seeing now, which is a lot of people filling the silence with respect to their negative reactions to the logo. And then point number three is to make sure, and I'm not sure if they did this or not, but you make sure you do a little tiny test of things with your most loyal customers, and you just get a pressure test to see how they react. Because if it's this kind of vehement sort of vitriol anger, you could probably pick that up in a smaller test, and you can figure it out way before this spirals out of control in the way that it has.
Yeah, I went back and looked at the stock. So over the last year, that stock is up 34%. They've been doing this overhaul, and at the time it was kind of heralded like, yeah, you need to do something to revive things, because if you look at a 5-year chart, that stock was down by 53%. So it's dropped pretty steadily since its height in 2021. They probably needed to do something to reinvigorate. But you're right. First of all, the logo's boring. This move towards simplicity. I've seen other brands that have done the same thing. Oh, this needs to be simpler, easier to read. I don't like any of the ones that they've done with that, especially when it gives me a feeling of nostalgia or when it gives me information, things I need to see.
Yes.
So that move towards simplicity is like stupid if you're not thinking it through. But they did need to do something.
I think they did need to do something. And you got to keep in mind, like, who is this for, right? So most companies, as they move through the product life cycle, they understand that their consumers at some point are going to leave the market, and there'll be new consumers, perhaps even younger consumers coming into the marketplace. So this is the kind of thing that a younger consumer might resonate with and sort of say, hey, I like that modernization sort of idea.
Like I said, I don't mind the white inside the restaurants. That looks okay to me. They said that their employees have said they like working at a brighter place. Maybe you want to declutter a little bit. I get that, but I'm also not super surprised by this reaction in social media, especially when you think about the hot spots of today and how Cracker Barrel holds a special place in people's hearts. I will say I was looking this morning on Twitter, and some of the competition is trying to jump on board. We've got a full screen I called up from Steak and Shake, kind of trashing what they were doing. I've seen a couple more they posted since, but sometimes people want to change things just to put their own personality on things. Cracker Barrel, their goal is just to delete the personality altogether. Blah, blah, blah. They say at Steak and Shake, we take pride in our history, our families, and American values. All are welcome, and we will never market ourselves away from our past in a cheap effort to gain the approval of trend seekers. I can't remember the last time I've been in a Steak and Shake. Is this just a desperate attempt from other brands to say, hey, pay attention to us over here?
100%. I mean, Steak and Shake, that was a bit of a low blow, but okay, that's fine. They want to jump in on this moment, and I think you're 100% correct, because it's an opportunity for them to elevate what it is that they're doing on the backs of kind of the misfortune of Cracker Barrel. So, again, I think that what's important to remember here is that, especially with respect to the stock price change, is that everybody needs to just relax, calm down a little bit. Social media outrage is out there, and of course, because consumers have these things called cell phones, they can now be a part of the conversation and get you to panic. So I would say to Cracker Barrel, hey, just be steady and go back out there and redefine and create the important moment to
why not pull a new Coke, like get rid of it? Sorry, we didn't mean to offend you all. We wanted to make sure that we were welcoming and doing things that would make everybody feel like they wanted to come into a renewed place. But we get it, we hear you, we are keeping the old logo, and we are still ourselves. I mean, I think this might call more for a new Coke moment than a, hey, just listen to our story.
Yeah, I mean, the new Coke that's a great historical example. I think this is a little bit different, though, because in some senses, Cracker Barrel is very much, like you said, associated with kind of more conservative values. It certainly tends to appear geographically in more red state districts compared to blue state districts and things like that. But I think here's the problem with what you're suggesting. If you backtrack, then you're signaling to consumers two things. One is that you don't really know what you're doing as a marketer, and number two, you're willing to sort of fly by the wind. Yeah, and so I think
you already proved that. Fess up. We're really sorry. We didn't mean to alienate everybody. We didn't want this to be a touchstone of driving you away. We're just trying to change a little with the times, but we still recognize our heritage and our roots, and we hear you. Just the logo would be an easy one. I get you're not going to undo the remodels you've done, but we hear you, and the old gentleman, the logo is important to us too. We're keeping Grandpa around.
Yeah, and if worse comes to worse and our conservative right-wing friends are super upset, I mean, at the end of the day, you could just tell them that the old gentleman was Biden, and we stuffed him in the barrel and threw him down the river, and maybe that'll be okay for the change there. I don't know,
but I'm serious. I mean, as somebody who's not looking at this from a political perspective, I didn't like the new logo either. I mean, just why get rid of something? It's like getting rid of Colonel Sanders.
Yeah, I mean, that's a fair point, but I think what we have to wait and see is what is the totality of consumers actually saying. So it's easy sort of to look at the online reactions and think that, well, that's what everybody thinks. I think we need to see a bit more data in terms of, more customers.
I love this new logo. It's amazing.
Yeah.
Keep it.
Yeah, and if you're not seeing that, to your point, you may want to cut your losses and maybe go back, or maybe do some sort of more of a subtle change, if that makes sense.
Okay. Americus, thank you.
I really appreciate it. Thanks very much for the opportunity.
It is 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan, who's not here today, and Andrew Ross Sorkin. Andrew and I are holding down the fort, right?
Summer Friday.
It is. Among today's top stories, Fed Chair Jay Powell delivering his final Jackson Hole keynote this morning. He is expected to outline policy changes reflecting higher inflation, maybe. I'm kind of thinking he's going to say, look, we've got it coming from both sides. We're worried about the labor market. We're worried about the inflation rate and what could be to come. So we will wait and see what the data tells us. But CNBC will have live coverage and a post-speech interview with Cleveland Fed President Beth Hammack. That is coming later today. NVIDIA has reportedly asked suppliers, including Foxconn, Samsung, and Amkor, to halt production of its H20 chip for China after Beijing told local firms to stop buying the chips over security concerns. And court filings show Elon Musk asked Meta's CEO Mark Zuckerberg to help fund a takeover of OpenAI in early 2025. Musk helped found OpenAI as a nonprofit back in 2015. In February of this year, he floated a proposal to buy the AI giant. Musk had earlier sued OpenAI, upset over its attempt to transform into a for-profit entity. OpenAI has made counterclaims against Musk.
By the way, we have Elon Musk, Elon's brother, coming up on the broadcast in just a little bit with Jeffrey Katzenberg. But new this morning, sources telling NBC News shortly before 7 a.m., the FBI and Montgomery County, Maryland police were seen at the Bethesda home of John Bolton, who served as national security advisor for part of Donald Trump's first term. Montgomery County police sealed off Bolton's street while an unmarked black SUV parked in front of Bolton's home. Montgomery County police confirmed they were on site in support of the FBI. Bolton was the target of an investigation in the president's first term for allegedly disclosing classified information in his 2020 memoir. FBI Director Kash Patel posted on X this morning, the raid began and no one is above the law. FBI agents on mission. Bolton has been a very big critic of President Trump over several issues, and President Trump has fired back in terms of the critique towards Bolton over many years now. So I don't know what to say.
We'll see what
I
they
think
find.
we're going to see
It does
what
look
they
like
find
retribution,
and how this all
I'm
works.
going to do it to you. Again, we'll see what they find. Yeah.
We will see what they find, and we will see what the public thinks, just how some of these folks are approaching this. But we will see. We will see. Let's take a look at the futures right now. We're looking at 135 points higher on the Dow. S&P 500 up about 13 points. The NASDAQ up about 40 points. Of course, all of this happening and could change when we hear from Jay Powell at 10 a.m. this morning in Jackson Hole. For more, though, on the markets when you get down to the New York Stock Exchange, our good friend Mike Santoli standing by there. What are you thinking about?
Well, Andrew, yeah, we have this tentative bid in the equity futures, as you mentioned. S&P 500 is coming off of 5 straight down days. That's the first time since the turn of the year, although it's been more a series of small nicks than deep cuts. The S&P's only down like less than 2% from its record high. It has been very rotational. Everybody's been talking about it, including us. The high momentum, mega cap, tech-oriented AI names have been giving back some of their built-up gains. Some laggard groups have been trying to make a comeback, netting out to the market kind of cooling off and sort of curling a little bit lower here. A lot of focus, as I keep pointing out, on that February high. We're still in this upper range. Let's say 6,200 will bring us back to the lows of, let's say, July. So we're still kind of, not cutting into muscle here with this pullback, but there is some tentative action ahead of Jackson Hole. Now, what's the message of the market with regard to the economy? Take a look at the cyclical sectors of the S&P 500 relative to the defensive ones. So this is the equal weighted versions of consumer discretionary, industrials, healthcare, and staples. And so you see that over the 1 year period, a big lead has been built up by those cyclical groups. It's suggesting that there is some firmness in the underlying economy. Now, this gap is somewhat narrowed as the staples and healthcare have come back a little bit. This relationship, in favor of discretionary peaked probably in February, but it's still suggesting that there's no real strong trend of weakness, at least as the stock market's estimation, in the economy. Now, that could be because those groups are counting on a rate cut or more as we get into the next few months. So take a look here at the 2-year Treasury note yield. Very interesting. So this right here was that August 1st week payroll report. We lost about 25 basis points, a quarter of a percentage point in the 2-year yield as we priced it a lot more Fed easing. Look at how it's built back up, and it's regained about half of all that was lost then. So there's a little bit more hesitation about exactly whether we're going to get a clear message that we have a rate cut coming in September. Hard to know if Powell would want to close off his options and be very emphatic about what's going to happen next, but it is certainly what the market is fixated on today.
Okay, Mike, we will remain fixated. Thank you very much.
When we come back, Jeffrey Katzenberg and Kimball Musk. We're going to talk to them about a new project, a new company that they're working on. And later we will head to Jackson Hole for a preview of today's big address from Fed Chair Jay Powell. Squawk Box will be right back.
It done.
Welcome to Squawk Box. Technology lighting up the entertainment world and the skies. Drone light shows have risen in popularity in the past few years, and now a legend in Hollywood is on board. Joining us right now, Jeffrey Katzenberg, founding partner of I never know. Wonder is what it is, but he doesn't spell it that way. Wonder Co. And of course, co-founder and former CEO of DreamWorks and former chairman of Walt Disney Studios. And Kimball Musk is here. co-founder and CEO of Nova Sky Stories. It's a drone light show company. And as of today, Jeffrey is an investor and strategic advisor at Kimball's company, and we welcome them both to the broadcast. Good morning, guys.
Good morning. Good to be with you, Andrew, Becky.
So help us understand. It's great to see you. Help us understand the backstory of all of this. Kimball, tell us about what the company is itself, and then how you teamed up with Jeffrey.
Sure. The story of Jeffrey and the company they kind of tied together. This was a division of Intel. Intel had been building this technology for about 10 years. In 2022, they were selling, and as many of your viewers would know, Intel has had to focus on the core businesses. So I acquired this division in 22. Honestly, the technology is absolutely mind-blowing. What most people see today are really just glimpses of what's possible. And a few years ago, 2022, we took it to Burning Man, and our friend Jeffrey there saw some of the art that we put up in the sky.
Andrew, you know I'm well known as a burner.
You're a Burning Man guy? That's what I was going to say.
I was going to say, I didn't know you were Burning Man.
Come on, give me some
That
love.
is the newsflash of the morning.
This guy's cool.
Hold on, Jeffrey, were you sleeping in a tent? Were you really sleeping in a tent?
Yes.
Come on.
Last year was in mud. Did you get stuck in all the mud out there, too?
No, I'm not that dumb. Anyway, and the reason I went to Burning Man, I love Burning Man, is the art. You know, the art cars, the art shows, and I was there in 2022, and suddenly in this sky is this literally mind-blowing exhibition, this eye in the sky. And that's what led me to, like, okay, what is this and who's doing it? And, you know, Kimball had put this together, and it was dazzling. And that was with a technology that was 3 years ago. And so what he has done and built out over these last 2 or 3 years is something that is going to blow people's minds. And the best analogy I could give to anything that I personally have experienced before is in 1990, I saw a small short film called Luxor the Lamp, which was made by John Lasseter and Steve Jobs, and was the sort of first glimpse of computer animation. And you leap and you just see what's happened in terms of, you know, the years later here, what became Toy Story and, you know, Shrek and all of these amazing movies over the years, is what I saw in that short film. And that is where Kimball is today. He has created something that when people get to see what this is, it just changes the whole perspective. And the sky becomes a new creative canvas.
So Kimball,
it is so fun. We're turning it from the sort of spectacle, which is, it can be a great spectacle, to actual stories. So 80, 90 minutes long, incredible, heart-opening, powerful stories. And we started to show Jeffrey some of the things behind the scenes that we've been developing. And we got to know each other's friends, as an advisor's friend, just a friend of the company. And we are so excited to have him join as an official strategic advisor and investor and board member to Nova.
Yeah, well, what are the economics of this business? Because you're right, people think of this as sort of a modern version of fireworks, and I think you're suggesting this is a lot more than that. Are people ultimately going to be buying tickets to go see a drone show individually?
And how do you keep them from sitting on the other side of the fence and watching it? It's not like a movie theater where if you're not in the door, you can't see it. I mean, if I get a good vantage point,
actually,
I see it for free.
we all grew up with drive-in theaters, and you actually want to be where you can hear the sound, where you can enjoy the movie. Yeah, sure, maybe you could get a glimpse of it from the side. But honestly, what we do with drones, it's so powerful. It literally cracks your heart open. You don't want to be watching from a strange angle or a distance. But just to give you a sense of scale, we're getting out there with these stories that are 70, 80 minutes long, and the tech is getting better and better and better. Where eventually there won't be any limit to how long you want. Not that we want it to necessarily be longer, but more like a Broadway show. You can imagine a 45-minute first half and a 45-minute second half. and the growth has been extraordinary. We sold 6,000 tickets to our shows last year. We are on track to about 500,000 tickets sold this year. It's a phenomenon. People are not just excited for it. They want the stories to be better and better. The desire to connect and just that emotional connection that you get, not just with the drones, but also with the community that's around you. Our shows are typically about 3,000 people in the audience. It's really a wonderful experience.
How many drones in the sky at a given time? You said 70 minutes, and I'm thinking to myself, do the drones have to come back down to get repowered? How long can they stay in the sky?
Our drones are, Intel spent a lot of time on this, about 10 years of investment. Our drones actually replace each other in the sky as the batteries come to a lower point. And it just keeps the story going. So from an audience perspective, it doesn't really matter.
But Andrew, the technology is, and this is all proprietary technology, is evolving so quickly. By next year, we'll be able to put a fleet of 10,000 drones in the sky at once. And so to understand the complexity and the beauty and the type of stories that you can create, you literally will be able to create characters. And instead of having, imagine having Tinkerbell come fly actually down into the audience and interact with the audience, or Toothless the dragon, and think about the stories that when you create characters with the imagery and the depth that is going to be possible with this technology, what's coming is just amazing. And ultimately, a few years from now, you're going to go to Dodger Stadium. You're going to go to, a soccer field, or to,
the Rose Bowl.
The Rose Bowl or something. And
with 50, 60,000 people, and you'll have an incredible, one of the greatest shows of your life.
What are the economics of it? I mean, do you charge it like a Broadway theater ticket? Do you charge it like going to a concert to see something? It's got to be more expensive.
Our mission is definitely family entertainment. So what is wonderful about this art medium, it's not that expensive to when you create a show once, the marginal cost to create it is not nearly as high as these other shows. And so we want it to be accessible. We want it to be 5,000 people in the audience, at a $30 to $50 price point, where you can come out with a family, and the content is also original IP meant for the family.
Well,
Children, parents, grandparents enjoying the show.
Jeffrey, as somebody who's spent a lot of time telling stories over the years, how much of this is going to be original IP, if you will, versus could you imagine your former employer at Disney saying, we want to license this, or we want to do a co-production with you using, Mickey Mouse in the sky?
the answer is yes, Andrew. We want to do both. We want to partner up with the best brands and the best talent in the world to help build the Nova brand. That's the objective here, is 5 years from now, we'd like Nova to be a great brand for family entertainment. But we are happy to partner up, with the best media and entertainment companies, the best IP in the world, and do things together. If you think about, Disney on Ice, or Cirque du Soleil, or so many of these things over the years, where these great partnerships have been created. And Kimball's already doing things with Disney, by example.
Yeah, it's actually, can you imagine Fantasia, which frankly, it's almost meant for drones. It truly is an incredible example of something we could put into the sky. And it's a symphony orchestra, and it's a 2-hour-long show. It's meant to be. So things like that are really fun. Right. But the original content, the creative studio we're building, we are so excited about what people will see over the coming years. And it's a real honor to have a storyteller like Jeffrey on the team.
Can you speak to just the safety issues that surround this? Because I've seen some videos you've probably seen on social media and the like, where, since you have 10,000 drones in the sky, there was at least a couple of incidents, but one in particular that I'm thinking about, where a couple of them hit into each other, and once they hit into each other, they all hit into each other, and then they all come down. Some of them come down on their own in a very safe way, but it also appeared that others just, drop out of the sky.
Honestly, safety is a real issue in this new art medium. Intel, obviously, it's Intel, right? They probably spent maybe 75% of their R&D on safety, And the other drones that are out there are mostly repurposed warehouse drones or military drones. They put an LED on them. You can still use it, but they're using third-party software. Unfortunately, it is a problem. And so we have a 100% safety record. We are so proud of our safety, but it is a real, it's really important in this industry as we create this new art medium that understand the importance of safety. And we are, we're...
But Andrew, because it is an issue, literally it is safety first.
Totally.
Not also, and for some of the other companies out there doing it today, they've taken shortcuts and been, less rigorous around safety, and those are the ones where you've seen issues. But for Nova, they have a perfect track record here. We're going to keep it that way.
Yeah, we're going to keep it that. Honestly, safety is everything. And this is when you're thinking about a brand new industry and you're just trying to get it to walk. You really have to think carefully about things like this so that you aren't set back. And we are so proud of our safety record. But the combined safety with the powerful emotional connection you get when these drones are in the sky, it's going to be amazing.
Right. Hey Kimball, before I let you go, I got to ask. You're on the board of Tesla, of course, and your brother is Elon. He just received a new pay package, a down payment on the pay package that we've talked about at this table almost endlessly for years now. I know it's a third of it, and I know you didn't vote on it because of the independent directors who did. But how do you see that whole situation playing itself out? I know we're going to learn a lot more, hopefully in November.
Well, as you said, I'm not involved in that process at all. That being said, I think my brother deserves to be paid. He has zero pay for the past 6 to 8 years. I don't think that's right. I'll let the Tesla shareholders make that decision, but I believe it does need to be he needs to be paid.
Let me ask you one related question, which is, I think there's a lot of Tesla shareholders who would love to know that Elon is going to focus as much as humanly possible on Tesla. And there's been some questions about whether Tesla would want to buy a piece of XAI as effectively for the technology, but also as a demonstration in terms of their own commitment to him, which I know, and to the AI piece, which is so important to him. How do you think about that?
Well, I work at Nova as well as at Tesla. I work on the AI, and so I'm very, very deep in the AI, and I'm able to transfer that knowledge into Nova, which is quite beautiful. There is just no way Tesla can't go without a deep, deep understanding of AI. We have a great business relationship with XAI. I will again let the shareholders decide that, but we are Tesla, an AI company, as any advanced technology company, Nova, Tesla, and others. AI is built into everything you do.
Jeffrey, Kimball, thank you so very, very much. It's great to see you. Have a great weekend, and come on back. Hopefully in person, we'll have a conversation around the table. Thanks.
And come on out and see a show sometime.
We would love that. We would love that. You coming to New York with the show?
You bet.
You bet.
Okay.
We're going to come go to the U.S.
River.
Open with you.
Yeah.
We're going to come to the U.S. Open with you.
Exactly. We got tickets. You come on down. See you soon.
Sounds great.
It's a date.
Thanks. See you.
Thank you, guys. We could talk to either of them for another hour individually,
Exactly.
let alone together.
Easily.
But we do appreciate their time this morning. All right, still to come today, the buzz before Jay Powell's Jackson Hole speech. What two former Fed heads are expecting as investors seek clues on the path forward for interest rates. Stay tuned. You're watching Squawk Box, and this is CNBC.
viciously.
Coming up next, we're going to head to Jackson Hole for a preview of today's speech by Jerome Powell. We'll preview the path forward for monetary policy with former Philly Fed President Patrick Harker and former Fed Vice Chair Roger Ferguson. In the meantime, take a look at the futures. 151 points higher on the Dow, NASDAQ up 52 points. The S&P 500 up 16, 17 points right now. Coming right back.
Calm. A big day for the markets as we get ready for Fed Chair Jay Powell's address in Jackson Hole. Steve Leisman is there, and he joins us right now along with former Philadelphia Fed President Patrick Harker and CNBC contributor and former Fed Vice Chair Roger Ferguson. Steve, a lot of anticipation ahead of this.
Yes, an awful lot, and I think I have a great panel to talk about it ahead of time. But before I do, I want to just update viewers on where the Fed funds futures market is going into this speech, and there's been a pretty dramatic change. Now a 65% probability of, or 66% probability of a cut, and that's down from 94% a week ago, and you can see the probability of a hold up to 34%. You can look at this and say, hey, it's still 2-to-1 in favor of a cut. On the other hand, what looks to me, what I would guess here, is that the market's decided they want to hedge a little bit against the possibility that the chair is a little more neutral or more hawkish than expected. Let me get right to my panel here. Roger, thank you for coming out this morning. I thought it would be great to start with the historical context of the challenge faced by the Fed, since you've been doing this for quite some time. I don't remember a time when there were uncertainty on both sides of the mandate. You have this inflation uncertainty from the tariffs and the labor uncertainty from both the tariffs and the immigration and deportation. Could you put this in some kind of context for us?
Look, I think you're right to talk about this as being sort of highly unusual. One has to go back to the late 70s, early 80s for this concept of stagflation in people's minds.
Right.
You know, it's what Paul Volcker confronted.
You have to go back even further to have this be part of a policy that deals with tariffs. Obviously, have to go back to 100 years before we actually talk about tariffs. So it's a highly unusual time. You're right to say that. The good news, to some degree, not everyone's going to like this, is Volcker sort of told us how to deal with this.
Right.
Have to maintain inflation credibility first and foremost, which then gives you the freedom to fight a slowdown. And the final thing I'd say is, while we're talking about this in the stagflationary context, it's probably modest on both sides as opposed to the extreme things that Paul.
Right, the dynamic is maybe the same, but the magnitude is much less.
Exactly.
So, Patrick, you were just in the room, and now you're a distinguished professor. Is that right? Can I say that? At Wharton, and you were recently in the room. Characterize for us, obviously, without breaking confidence, the debate inside the room about what the right way to respond to what Roger just laid out is.
It's all how the lens you're looking through in terms of uncertainty and risk, right? That's where it is. And that's where people come out on different sides of the issue, right? Whether it's for cutting or holding, nobody's for increasing right now, right? I think that's pretty clear. But, you're looking at the data, and the data is fuzzy. Let me use the word fuzzy. It's just not very crystal clear. And so at this point, I was in that camp of let's sit here and hold and let's get a little more certainty before we move. We're heading, Roger's right, we're in this period of, let's call it stagflation light, right? It's not the 70s, but it doesn't feel good right now.
When I think about where the committee is, though, I hear people in the forecast tells us that everybody really wants to reduce rates. They think they're restricted. It's a debate about the timing and how much certainty. People push back on that uncertainty thing and say, you know what, it's always uncertain, and it's not really much different, and you got to do policy in an uncertain environment.
Okay, so there's uncertainty that the world creates, and then there's uncertainty that fiscal policy creates.
Right.
Let's be very clear.
Right.
This is what we're doing to ourselves in terms of changing the tariff rates constantly. I spend a lot of time, and I still do, talking to business contacts. They're just sitting still, just trying to figure out what's going on. Now, some are trying to plow forward. All right? If you're in the data center business, you're definitely plowing forward. But others just sit and wait. And so, I think this is a different level, different type of uncertainty right now.
Roger, when it comes to how the chair splits the difference here, and he has shown himself to be a person who is pretty good at creating consensus. If you even do statistically the numbers, there have been fewer dissents under Jay than almost any other Fed chair. What about this idea that he could try to do, maybe call it a hawkish cut, where he says, we're going to do this one time, and then we're going to wait and see, and try to keep the market from pricing in multiple cuts down the road?
Let me respond to that very directly and then add one other thing. I think you're absolutely right. He's going to try to create as much flexibility as possible.
Right.
So this notion that the market is now gradually moving down maybe to 50-50 over time on cut or no cut, I think is going to be very helpful to him. I think he's going to be able to use a number of tools. So there's the policy rate itself. There's also what he says at the press conference. There's so-called the lean insofar as one can talk about it, so possibly a hawkish cut. Let me go back to something that you said earlier, though, where I can respectfully disagree. I don't think everyone wants to cut. The last time we had the SEP, remember, 9 members said 2 cuts this year, 2 said 1 cut, 7 said no cut.
Fair enough. Yeah.
So I think this is really a close call as to the wait-and-see group versus maybe a slight tugging group, so to speak.
So let me layer on all of this stuff we're talking about, the pressure from the administration to reduce rates. And Joe and I had an interesting debate the other day, or discussion, where I said there's been unprecedented pressure to cut, and Joe said unprecedented public pressure. You've been there, Roger, and I guess you side with Joe?
I absolutely side with Joe, and
because
I'm done with you, but I'm now on with Joe.
Now you're good with Joe. Joe's not here today, but okay. I'm going to write him a note saying Roger agreed with him.
No, but we should be very clear about this.
Yeah.
Administrations often pressure the Fed chair privately.
Right.
You and many of us have lived through a period where that became out of favor. The last 2
while I was covered.
Didn't happen, but we shouldn't pretend that this never happens. The public pressure, highly unusual, however, but every Fed chair knows that this is part of the game, and you have to have broad shoulders. and plow through and do the right thing.
Patrick, how does it play in the room?
Well, first, let me go back to the tools that Roger mentioned. There's one other that you didn't mention, which is the balance sheet runoff.
Right.
I think my own personal view is I think you could stop that runoff right now, and it would go flat for a while.
Brought it down to a trickle, right?
Yeah, but let's just stop it, right? It's not a big effect,
right?
But it is a signal,
okay,
right? And that I think the committee could use. So in the room right now, what do you want to know?
Yeah.
You know, I think you see it in the SEP, and I think you're going to see it in September's SEP. There's a lot of divergence of opinion. You look at those dots and the divergence of those dots, because people again are looking at the data and they're trying to interpret what they see. And so the data, we're all looking at the same data. Everybody's looking at the same data, but it's how you interpret that and what your risk tolerance is. And so for me, I was a two-cut person in the last SEP, but you know that was with a lot of grains of salt, right? In terms of not knowing exactly where this was all going to land.
Yeah. Becky has a question back from NASDAQ.
Yeah, I just wanted to hop on what President Harker was talking about with the quantitative tightening, the Fed's balance sheet. We had David Zervos on earlier this week. He's been considered as somebody to be the potential next Fed chair. He said that he thinks the balance sheet is neutral again, but it's still more than $6 trillion. Granted, it's down from $9 trillion at the height, but it's a heck of a lot more than it was at $1 trillion before the financial crisis. What do you think the fair level or the new, I mean, it almost sounded like you agreed with him, just in terms of thinking that are we at a neutral rate for the balance sheet right now?
So the honest answer is we never know exactly what that level is. And last time around when we did this, we thought we knew, and we were wrong, right? We had the number too low. So this is where you need to watch the signals, watch the markets. But by holding steady right now, you let liabilities build up and the balance sheet will naturally run off, right? That, I think, is a prudent strategy for what we're facing right now.
Let me conclude with one question to Roger. Roger, there's the Fed institution, which is an important issue about the independence of the Fed. Do you think it withstands and ends up in pretty much the place it is right now, given the pressure that's put on it, given the attack on Lisa Cook, which is obviously a real issue in terms of the documents, but we don't know the other side of the story? There's a lot of pressure on the institution right now.
I think there's a lot of pressure on the institution. My view is this is a really important time for the institution to educate the American public on what it does and why it's important. While we've gone through a period of inflation, people for the first time literally, in 30 or 40 years had to deal with that. So everyone now understands, wow, this inflation thing is a secret tax on the middle income and lower people and lower class individuals. The Fed is the institution whose mandate is to control inflation as well as the other side. And so I turn this around and say it's really time for all of us to educate the American people. That's the way we ensure independence. Final point I'd make is if you look across the world at places where independence of central banks have eroded, it has not been a good outcome. And so I really think this is an opportunity for everyone to understand what this institution does.
Roger? Do you think it ends up maintaining that independence?
I think it maintains independence because the population will get behind it and say, wait a minute, we had inflation. It's not a good thing. We need an independent Fed to maintain that. Congress, et cetera, do your job. Protect the Fed as best you can.
Roger, Patrick, thanks so much for joining us this morning. Becky, we'll have full coverage of this speech coming up at 10 a.m. Eastern Time.
And we are looking forward to it. Thank you, Steve, and our thanks to both Roger and to Patrick.
Coming up next, Washington saying, let the chips fall where they may. We're going to talk about the sector and the president's push for stakes in companies receiving CHIPS Act subsidies. Don't go anywhere. Squawk Box returns on a very big Friday morning.
ABC Plus.
The government is investigating taking possible equity stakes in computer chip companies that receive funding from the CHIPS Act passed under former President Biden. Joining us right now is Mike Schmidt. He served as the director of the CHIPS program under President Biden. He's a distinguished visitor at Princeton University. And Mike, there's been a lot of vim and vigor, a lot of talk about what this means, these changes that might take place. What do you think about it?
Well, thanks, Becky. Certainly interesting times for the CHIPS Act and the CHIPS industry. I think the key thing that we have to always keep in mind is thinking about what are we trying to achieve here. So the CHIPS Act passed on a bipartisan basis. It has unlocked an extraordinary amount of investment in the U.S. semiconductor industry. It's done that by providing subsidies, incentives that close the cost gap with countries like Taiwan, Korea, elsewhere in the world that are able to build fabs and produce chips at lower costs. And so that's the idea. That's the contract. You provide incentives to close the cost gap. Providing equity is a different construct. These are companies that generally can raise equity on their own in the private markets. Equity comes with a cost, cost of equity for shareholders. And so, ultimately, CHIPS is a really important national security objective. It is a bipartisan objective. But the question is, what are we trying to achieve, and how are we using the tools of industrial policy to achieve that?
Yeah, I guess the construct has changed, though. When you look at tariffs in the new administration, it's changed the cost advantage factoring into some of these. And the way we've kind of been talking over this past week is that the CHIPS Act was there as the carrot to try and convince companies to manufacture here in the United States. This might be seen as a little bit more of a stick that, hey, build it here or we're going to charge you a lot more anyway.
Yeah, I think that's right. I mean, I think tariffs are a tool in what you might think of as an industrial policy toolkit. You think of grants, you think of tax credits. This Congress and administration has actually increased the tax credit for CHIPS investment, so that's another carrot. You think of loans, you think of grants. They're all tools in the toolkit. I think they can all be wielded appropriately. I think overall, though, what you do want to see ideally is a long-term strategy, a kind of stable approach to long-term industrial policy. Remember, a single leading-edge fab costs $25 billion now. It takes 3 to 5 years to build. It'll pay off over the course of 20 years. So you do want a stable, long-term policy environment and incentive structure. But in that context, absolutely, there are many tools that you can use to try to achieve your outcomes.
And here's part of the problem now. It feels like under this equity strategy, and by the way, I do understand the national defense aspects of this. I do understand wanting to make sure that we produce things here in this country so we're not reliant on other countries. They can't hold us up for ransom and say, you're not going to get these things that are critical to your industry. But at this point, if you're talking about an equity stake, if I'm a company that can do it on my own, I don't want your help. So you only get the losers saying, yeah, sure, we'll take some of the money.
I think that's a real concern. I think that, again, the construct of the grant is to say, we want you to be cost competitive with other countries so that you can do this here. Equity doesn't provide that benefit, and so you might end up attracting a set of companies that are more interested in funds for, say, liquidity purposes or cash purposes as opposed to competitiveness purposes, and I think that's a concern.
Is Intel a cash-strapped company then, to say that they want the money and they'd potentially take it? If you don't say that you don't want the money, does that label you as a loser who's on your way down?
I can't speak to how the negotiations are going between Intel and the government. What I can say with respect to Intel is, number one, I think it's an important focus. It's an important national security priority. CHIPS has a range of investments. You have TSMC building a massive facility in Arizona. You have Samsung in Texas. You have Micron, SK Hynix, and beyond. But Intel obviously is a really important part of the national strategy. I think the question is, again, what are we trying to achieve, and what tools do we have to achieve it? And I would just say on Intel, The issue there is demand, right? They need customers for their fabs.
They need customers, and you can't manufacture that at the government level. I do understand Treasury Secretary Bessent's point, though, that we should be getting something back for this. Is there any way to incentivize these companies and not have the American taxpayer pick up the entire bill? We should get something for what we're putting out.
But hold on, can I ask this question that relates to this, though? Isn't the whole point that we are getting something back? That as taxpayers, no, but as taxpayers,
Is this an infrastructure bill then, and then do you treat these companies like utilities? If we lay out the
well, no. What I'm saying is the benefit to the benefit to the taxpayer may not come in the actual equity. The benefit to the taxpayer is that we have the national security and we're producing them in the country.
Everything else that we see that way, we end up treating the companies who participate in it as utilities. Like you're going to have to give something back for what you get. And are you putting? It's a mess. It's a bit of a question because I can play either side of this.
Yeah, I think look, this is debate, and so we set up the CHIPS office when I was there as basically a private investment fund in the government. We had industry people, investment folks, private equity folks. And we sat in an investment committee and we had these discussions. And to Andrew's point, the way we always thought about it was the return for the taxpayer was in economic and national security.
Yeah, but what if you picked the wrong companies? Like it looks like you may have in some cases.
Well, I think what we did was have a diversified portfolio, right? So we said we're not going to put all our eggs in one basket. Just like any investors are who are watching this right now, you say, yeah, we're going to bet on Micron and Samsung and TSMC. And Intel was an important piece of that. And then you structure the awards in a way that money goes out over time, tied to milestones, so you're protecting taxpayer dollars. But also,
would you still be giving them money?
Based on risk.
Based on where they stand today?
I think that the Intel is an important national security priority. I think the whole purpose of programs like the CHIPS Act is for the government to take some risk. I think there are ways to structure things to protect taxpayer dollars. And what I think we need to continue to do, which we tried to do while I was in government, and I hope the current administration is continuing to do, is to focus on the demand side and really try to make sure that we can help Intel to fill the fabs. Ultimately, that's something Intel needs to do on their own, but I do think there's a role for the government to help.
But do you, Mike, I know they're going to kill us. Do you think the government should effectively be pressuring other private enterprises to buy chips that they otherwise would not buy? Because that's where this all goes. You say create demand.
It's a tough question, and look, all of this is uncomfortable. You're giving grants to private companies, you're giving equity to private companies, and the question is, what is the tool that is going to help to solve the problem? And in the instance of the semiconductor sector, and Intel in particular, yeah, demand is the question. I would also say, Andrew, in chips, there's a long road between requiring purchase of chips and getting major customers of chips, being NVIDIA or an Apple, to really work with a company to try to tape out product in their fabs. And that takes major investments. That's hundreds of billions of dollars. And so I think what we hopefully would be seeing over time is a lot of companies working with Intel to kind of give them a chance to succeed. I mean, think about it. Right now, we live in a world where basically all of the world's most important technology is made by a single company that's mostly operating out of Taiwan, and that's an extraordinary company, and there are extraordinary efficiencies that we gain as a result of that.
That's true.
And I think there's a public policy interest in trying to create a more diversified.
Mike, we are way out of time, but come back. This is a conversation that deserves a little more discussion. Thank you.
Thanks.
Joining us right now, Jason Pride from Glenmead. Good morning to you. We have literally 90 seconds, less than.
Okay.
Okay, up, down on what you're going to hear from Jay Powell today and what the Fed is going to do in September.
Look, the Fed and Powell in particular is going to have to walk a little bit of a line here, right? Data, generally speaking, inflation has been coming down to the range they want, but the recent employment reports have been a little bit on the softer side. So this argument that there's a little bit of softness in the economy on a near-term basis is strengthening a little bit.
Okay.
The rates have been higher than where they want them to be longer term. So there's probably going to be a little incremental pressure to put another rate cut in place in September and probably a second one in December. And I think that's generally what the futures market is expecting at this point in time.
So you're staying. You're not playing a contrarian play here. You're going with the market. That's what's baked into the market right now.
I think this is one of those environments, and the Fed tends to have a bias to, if the market's saying one thing and the economy and markets are generally performing okay, they'll generally deliver what the market expects in order to maintain status quo. And I think that's what they're probably going to be targeting.
Do you think the economy maintains? That's the question.
I think the economy maintains, and then as we look into 2026, the uncertainties of tariffs from 2025 fade in the background, and the benefits of stimulus heading into 2026 actually picks up, and we actually see a modest acceleration.
Thank you, sir.
Thank you.
Becky, thank you.
Thank you.
Have a great weekend. Have a great weekend, everybody. Squawk on the Street begins right now. See you Monday.
Today's the day the street and global markets have been waiting for. In about an hour, the Fed chair will deliver a keynote at the Fed Symposium in Jackson Hole, and of course, we will bring it to you live. Good Friday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Sarah Eisen, Mike Santoli at Post 9 of the New York Stock Exchange. Kramer in favor after the morning off. Equities going into the speech with some green arrows, but S&P coming off a 5-day losing streak for the first time since January. Let's, of course, begin with the Fed chair in Jackson Hole later this morning. Our Steve Leisman is there. Big day, Steve.
Yeah, a little light on the mountains, and maybe we'll get a little light shed on how the Fed chair feels about where we ought to be going with interest rates. And I think this is important for a couple reasons. Obviously, it'll provide some guidance to the market, but also guidance to a very, I'd say, divided committee and the opportunities we've had to chat with the committee members. There's very, very different views. And we had Patrick Harker, the former Philly Fed president, who really just left office in June. He talked about the fuzziness of the data. And I think that has led to the different interpretations of what the right outlook is among committee members. I've divided like this. A couple folks ready to cut right now, they're ready to cut in July. A bunch of folks who say we shouldn't cut at all, and really a very large middle of folks who say, I want to wait and see. And I think Powell's going to lean on that in the sense that there's still quite a bit of data. Another inflation report, another employment report, the benchmark revision September 9th. Write that down in your calendar. That'll be important for shaping the views. And then more data, of course, on inflation and from companies and listening to those earnings reports about how the tariff are working through. And then some discussion, I would say, among committee members about the idea of, in the inflation report we just had, there was not just kind of tariff-linked inflation, but tariff on the inflation on the service side that caused some concern, guys.
I mean, I guess so. What is the likelihood, Steve, that he's going to say anything definitive about September, given we still have another big inflation report and another big jobs report before that?
I think it'll be subtle, Sarah. I think that's probably a more operative word. I think it'll be a bit of a Rorschach test in terms of people who look at it, who think the Fed's going to cut, they'll see what they want in it. And people who don't think the Fed ought to be cutting it or don't think the Fed will cut, they'll see something in it. I think you're right. I think the idea is maximum flexibility. And it's really fascinating, Sarah, to look at how the futures market has traded. All of the chatter out there from the Fed committee members has providing flexibility to the Fed in terms of where we're at right now. If you look at the futures markets, we're at 65% probability of a cut, 35% probability of a hold for September. The cuts eventually are worked in and priced in as the year goes by, but they're pushed ahead. And I think that might be something that's working in Powell's favor, that gives him the ability to react to data. I don't think Powell wants to push the market away from a cut right now. I think if that's warranted, let the data do the talking, let the data do the pushing in terms of where the market is priced. If that data comes in with a strong jobs report, the market might price out that September cut and provide the Fed the flexibility to cut or not to cut. And if it comes in weak again with a huge debate, Sarah, that you and I have been discussing, which is what's the right run rate or the right equilibrium rate for a jobs market where you're losing people in the labor force because of the immigration and deportation policies of the administration.
Yeah, Bostic yesterday talking 50 to 75K, certainly 6-month average 81. Those numbers are getting a little bit closer together, Steve. We'll be staying in close contact with you on that gorgeous live shot. Steve Leisman in Jackson Hole this morning. We'll talk a little bit more. You know, FedWatch today takes a look at past Jackson Holes, and Ben Amons argues that since 2018 or so, Powell has emphasized price stability over, say, employment, which, I don't know if you take that as hawkish or not.
There's always so much hype going into Jackson Hole because the Fed chairs in the past have used it as sort of a policy pivot point when the timing works out. I think that the challenge here for Powell is that they're risk building on both sides of the mandate, on the inflationary side and on the job side. And which one does he weigh more? Which one is the bigger risk? As of the last meeting, the majority of participants found that inflation was the bigger risk. But does that change now that we got a weak jobs report? The 3-month average on job growth is 35,000. I mean, we now have a slowdown in hiring.
Yeah, that's like the worst since COVID.
It's the worst since COVID. And so I'm a little surprised that so far the Fed speak out of Jackson Hole has not emphasized that the labor market is slowing down and that they want to get ahead of it and do something about it and not be late when it comes to getting ahead of a slowdown. I mean, one big equity correction, Mike, and we could be talking about a real slowdown here.
Yes. I mean, I do think that ambiguity and ambivalence are almost the right place to sit with all of this, because everything you say is absolutely correct, and I do think that in other times you'd be eager to kind of get out in front of this softening trend in the labor market. But if you look at the premise of the June outlook for the Fed committee of 2 rate cuts by the end of the year, it was that the unemployment rate was going to get up to 4.5%. And the market's concern is going to be if the Fed is hiding behind the unemployment rate specifically and using that as an excuse for inaction because inflation hasn't cooperated yet. That's a problem if you think that the unemployment rate's not giving you an accurate read. Now, right now, consumer activity has not fallen away in such a dramatic fashion that you'd say it's an emergency we have to respond to if you're the Fed. So it is about being proactive or not being proactive. And honestly, I don't want to say the stakes are low. The stakes are low in terms of exactly when we get the next 25 and maybe how many are there. Because if you look at, the Fed thought we were getting 2 by the end of the year. In June, we've had a pretty cataclysmic jobs report since then. In theory, that should maybe lean people more toward a cut. On the other hand, market's hanging in there. By the way, 3% inflation, the stock market doesn't care if we're sitting at 3% for a while. It only cares if it's going to cause the Fed to over-tighten.
But and the bond market. I think the key is that the bond market is more worried about jobs than inflation. I mean, you see that in inflation expectations. You see that in the cuts that are priced in, and that I think is a question for Powell. Now, I would say if he disappoints on the whole, like, we're going to cut in September trade, Mike, the market's in a much better position now to deal with that because, as Steve mentioned, the swaps market has reduced the odds to 65% from almost 100%.
110.
Yeah.
Right, and now there's almost like a chance that they go 50 basis points by the end of the year, which does set him up easier. But I don't know, did you hear Beth Hammack yesterday, Cleveland Fed president?
Yes, I mean, her main points were we're missing on inflation. The notion that tariffs are a one-time or one-off may not hold. We're just starting to see the impact of tariffs. And then, of course, some of the commentary this morning in Jackson Hole, Harker talking to Steve about sort of the difficult conundrum that the Fed in general is finding itself in. Take a listen.
You're looking at the data, and the data is fuzzy. Let me use the word fuzzy. It's just not very crystal clear. And so at this point, I was in that camp of let's sit here and hold and let's get a little more certainty before we move. You know, we're heading this, Roger's right, we're in this period of, let's call it stagflation light, right? It's not the 70s, but it doesn't feel good right now.
Kind of coincides with Krugman on a Substack today talking about a jobless recovery, which we've been hearing a little bit at this desk over the last week or two.
Sure. I don't know if data's fuzzy. I think like we're still debating whether tariffs are going to be inflationary, which only goes to show that they haven't been as inflationary as everyone thought. And yes, we've seen a little bit of a tick up in inflation, but nothing sort of out of the range that would put us, you know, in worrisome
Well, I think the
territory.
argument is that we basically have built these lags in because of the stop-start nature of some of the tariff rates. I mean, even if you look at company by company, all the retailers, they're pushing their tariff impact into fourth quarter of next year.
Maybe there's a lot of mitigation.
But the reason
as well.
I would say I would agree to a degree with Harker about the data being fuzzy is you're actively reducing the labor supply. At the same time, you're applying this production/consumption tax in the form of tariffs, and you don't know who's going to really pay it or how much is kicked in yet, and therefore you have to figure out exactly how much credence to give every number that comes in. It's coming from a decent place, I think, right? Pretty benign, somewhere near full employment, inflation kind of bumping along where it was late last year for the most part. So I don't think it's a matter of everyone's ignoring the obvious thing to do. But I think it's one of these situations where people of good faith can totally disagree about what should be done next, and people of bad faith will just use the data they want and say, get the rates down.
Right.
You know?
Although to Hammock's point, her basic argument is the game, so to speak, is just getting started. So we're arguing about who's going to win, and it's the first quarter.
I think there's another argument to be had here, which is, can the Fed really do anything about tariff inflation? You know, the question is, does that inflation spread more broadly into the economy, in services inflation, in wages? Like, that's monetary inflation. That's what the Fed can do something about. They can put the brakes on, or they can keep this restrictive policy. I mean, if we're just seeing some goods prices increase, is that a reason for the Fed to choke off the economy? If we're also seeing weakness in the labor market, that's the debate that I think that they should be having, and that I think points them closer
Well,
to
we don't care what you think.
to a cut than to staying restricted.
You did see some folks pointing to the uptick in services inflation.
Goodbye, mouth. Good morning, retail traders. Yabba dabba doo. Okay, well, time to go make my tea. God, I wish you had it. You're so beautiful. It'd be hard to work with you. You're so beautiful, Jenny. I love it when she wears black. And she's showing cleavage today again. So we're going to have a good day. Good morning, retail traders. Oh, I'm going to get comfortable. Market's up this morning. We're at resistance right now on the SPY. So it's a major. And we got supports. First support's at 633.23, but that could be the orb. And a little bit above the orb. So it's hard to say. We'll look at the 1 minute. Yeah, this could be your top of the orb, could be your first support. Then you got a pivot point right here. Damn, what's this? I don't understand why sometimes it just don't want to. There it goes. $635.52, $635.50. Collins says dual mandate risk a rough balance. You know what? You're just making all kinds of excuses. Who asked me about Tiva yesterday? We just missed it by 2 cents this morning. The resistance. Go. Shit. We did break resistance just by a few cents here at open. Whoops, wrong. Oh, reaction to J Powell at 10. Oh, it's 10 Eastern time. He's just going to yak. So, I'm going to say we're going to probably pull back at first this morning. I'm going to continue with down up. Down up. Jimmy voted. We were wondering the reaction to J-Pal at 10 a.m. Eastern time. Are we going to go up, down, down, up, or no change at all? And I think we have to just to listen to that weasel speak. But the market thinks they got it so right. And they've been saying they've been wrong. And the market's has consolidated this week, and we've had some pretty nasty days. So I think after this week, we'll start moving up again. Today's Friday. Tesla. Lily. The CEO says survival matters. Most of the company bets on aggressive pricing for new ES8, whatever the heck that is. Nile. How the Tesla rival has escalated the EV war. Really? There's a war? There a war? man? What are you talking about? What are you talking about, man? What are you talking about? This resort's going to have a thing called fondue. I've never had fondue before. So I'm excited about that. I'm watching the grounds here, where I'm going to be at. 200 and some rooms, so it's going to be small. And I'll be able to relax. It has one pool. I'll play a game of chess with some chickadee. I'm wondering if we can carry like protein bars on the plane. And play some ping pong with somebody. Oh, look at that guy. He's got a thong on. God, I hope this ain't no gay resort. Thongs, man, they're so disgusting. I mean, shit. Put a towel over yourself. Mare nostrum, whatever that means. Look here. Oh, we got a shower. Shower's right by the beach. That's nice. I'm going to grab me one of these little tikis here. Oh, now she's got a thong on. Oh, I'm going to have to rewind that. Whoa! How dare you? I'm looking forward to my trip. Yeah. So on the SPX, I'm thinking 6380 at open. Oh God, we're very pretty good bounce on /ES. So somewhere up in here, we'll probably break up higher, maybe 85. We got 1 minute left. Sarah, don't be a hero. Don't make a fool of your life. Sarah. Yeah, be my wife. Okay, here we go. Boom. I said 85. I was right on. So the first support's going to be right here. $63.78. SPY is going to be after hour high for the first support. Let me see what I got over here. Wouldn't you know the program's going to be a little wacky. Got a double bottom on Meta. Almost a triple bottom. Double bottom on Meta. Tesla's 319. PDD, I got 131.13. China. Baba had a good after hours run. Everything run after hours on China. Yeah, this market all of a sudden woke up bullish. Remember they were threatening we were going to go into a deep depression when we had the pullback day. So we got 63, 93, 65. The 60-40s on the SPY when we get a pullback, or the 60-41s, but I like to get closer to that money. I like them even numbers. And then on the put side, the 237. I'm going to let it pull back before I think about a double bottom or something. They're at 220 when I looked at them. $213. Oh, damn, I'm looking at the wrong. Looking at the SPY, and I'm looking at the SPX chart. Can't see where my double. There we are. What the fudge? It says SPY. There it is. That's the VWAP. Tesla's coming out strong. Tesla has a strategy to sell more Cybertrucks. Higher prices? What? That ain't no strategy. Tesla has spent the past few years slashing prices in a bid to improve affordability to outsell its rivals. But the electric vehicle maker appears to be adopting a different strategy with its fastest Cybertruck. So they got a new Cyber, 114 grand? God. $114 grand? Are you kidding me? I don't know if I can do that. Tesla just had a big bounce. Dadgummit. I might just let them all pass me by here. SPY hit my 638 resistance. I have 637.53. So what's that doing on there? $637.53. Might have been right on top, right on it. $637.53. Oh, that's down here. I don't know why I didn't type that one in. So we broke it. That means we could come back and hit it. I got 638.72 next. On the SPY. Dadgum. Screwed that trade up. Man, what a run. Shit, I missed it. Turn on the air. Man, it's just taking off. I got 64.14.58 next for the SPX. That's $7 more. And where I got that, we'll find out shortly here. I missed out on a good trade today. So on the hour time frames, what I see, this last candle right here, so we're getting up to a head and shoulders. And we'll see if we have the correction here once we hit 64.14. If we do, and that's a head and shoulders on the daily. And then on the weekly, and I could raise that up a little bit on the weekly. I'm going to put a new trend line right here on this here pivot point. It's hard to see it. Right tool up. Right there. Perfect. So back to 6,400. Now, that what's it, Mr. Green on Schwab said 6400 channel, and that's where I've got it too. So we're at the 9. That's on the 1 minute. In the 5 minute. 5 minutes looks, that's probably where I got that at. So your new support will be right here. I'm gonna set an alert right there on that peak. That was yesterday's close, or 2 days ago close. We got three black G's. TBG. Wonder what that means. Two black gapping. Two black gapping. Two black gapping candlestick pattern is known as two black gapping candles. Okay. It's a bearish continuation pattern consisting of consecutive black or red candlesticks. I don't know if I want to believe that. I don't see it continuating. I see a nice bounce back up. There's your gap. Then you got your two black. $239.77. Let's look at the puts. We still got a long ways to go. I mean, this thing can really fly. Right now we got a W-shaped pattern with a breakout to resistance. So that, I think at 639.77. I have 641.64 long. So I think at 639.77 has to break. And we hit 72. So we're pretty much spot on that. If it doesn't hold the 9, I get puts. The 638s or the 637s to the VWAP if this double bottom doesn't hold. So this is your support right here. And I'm starting to get a little excited because I missed the run. And I think we're going to pull back and then break out, but got to hold that. Man, I really got a dilemma I bought some real fancy cologne, and I like to wear good cologne. I like to try it out, you know, and buy another one if I don't. I've never bought the same cologne ever. So I got some of this Coach cologne, and I'm putting it on, and I don't smell it. And then one of the girls come up to me and said, "Man, Jim, are you wearing some good cologne?" I said, "Yeah." And there's this other department that this girl's real sensitive about any kind of smell. I mean, just goes to hacking. So I heard her hacking yesterday, and then I heard that other girl come to me today and said, "Man, you smell good." So I went down and asked the girl, I said, "Are you smelling my cologne?" The one that hacks. I mean, she hacks. And she gets her breathalyzer out and puts a mask on and everything. If I even squirt a piece of Lysol. She just got some kind of health problem. So I asked her. I asked one of the guys that works next to her, I said, "Can you smell my cologne in the morning?" He said, "Yeah." And he's a little sensitive to it. So I asked her, she puts that mask on. "Yes, I'm sorry." I said, "I'm sorry too. I won't be wearing it no more. It'll save cost anyway. I won't use it." Here we go. We're at support. So get ready to look at the calls too. Now, I don't want nobody getting sick because they smell expensive cologne. Shit's not cheap. They'll probably last me twice as long now if I don't put that on in the morning. I mean, this girl just looks like her guts are going to spill out on any kind of smell. And then she comes in and she puts this shitty hippie incense on, and I can't stand that smell. She used to. I would go back there by her desk and I said, "Man, this shit stinks." You probably know what I'm talking about. So the 643 calls, or the 642 sound better to me. They're at 114. Now take it, if it hits the VWAP, I'll run it up, but we're at support right now. Because once you get that cologne on you, you can't hardly smell it. But I can smell it now. Okay, get ready. We're at the VWAP here. We could drop a little more, but I'm going to get ready to buy these when yeah, the puts would have been good payday. 642s. Ah, darn, man, they're up $2 contract. Okay, here's the calls. $0.89. Now, I don't know if this is a good trade or not. Kind of a little risky here. Because it could hit this 30. I've got the Fibonacci set on it. And we're under the VWAP, so that's bearish. If we break the VWAP, we'll run back up to the top here and get out. But right now we're bearish because we're under the VWAP. So this can run down and hit the 200. When you're under the VWAP, you're bearish. When you're above the VWAP, it's a pivot point, more or less. VWAP is a volume-weighted price average. Intraday trading benchmark represents a security average. Price over the trading period, adjusted to the trading volume. It's calculated by dividing the total volume traded price multiple multiplied by the volume. Damn, what happened here? Yeah, I'm out. Woo! Yeah. Thank you very much. Waited perfect. $230 and $205, $253. Let's get it. I got some. I sold some at $205 and $266. There it is, $263. Fuck yeah. I nailed it. Anybody take that trade with me? Good job, Eduardo. We made that. That's. I'll take 10% of your cut. Send me a check by mail so I can enjoy it on my vacation. Golly, that's incredible. Woo! That really was. I just don't want to brag, but God, I think I need to. You know, I've never been a bragger, but geez. Right to the Fibonacci extensions. Good job, Edge. Donate 10% to your platter this Sunday. Whew. Incredible. I said I was going to wait for a pullback, and I did. Oh, yeah. Hey, that wore me out. Oh, man. Whew. The adrenaline rush. The adrenaline rush. Oh, gosh. I'm going to help this girl out. Oh. I get that initial thing wrong, but I think I had it right. Magnificent again. But at the initial, I know he speaks in the market bam first. So he must have said something about a rate cut. Very, very good. Upside world. Well, I'm thinking the VWAP again, because you know there's going to be at least a 50% correction on that Febby there on that run. So we're going to take that off and put a new one up here. So it's going to be right where I have that trend line. Set an alert above 641.21. That matches with the VWAP. So we're at a double top with a higher high. We're back to my orb, which would be in that Fibonacci range. Sometimes the market gets a little ahead of itself, but and then on my oh yeah, we got a red zone at 644.61. $644.58. See if we don't get a pullback from there. Could go a little bit higher, but not much. At 644.78. So like 20 cents. Or we stop here at the 58. So if we go back to the SPY, we don't want to use that one. We hit 45, so we could shoot up a little bit more. What did I say that was again? 58 and 78. So that's your resistance to break. Support if we double bottom, but I want to get it in here. Congratulations on who all took that trade. I think I did very well today. by waiting, missing the ride, and being a little bit more patient. Because I could have scalped that thing for $150. The calls. The ones that this morning at open. Just take time. Let break that channel, we'll get calls, but then I think if it breaks it, it'll pull back and retouch it. So I don't want to be in no big hurry. Volume's kind of stuttered out, and I'm going to make a phone call. It's time for me to do a good deed for a chick. It's in a little bit of trouble. Not that I want to, but I do kind of. So I'll be back in a few minutes. James Howard. Could I have a Kimberly call me? 417-814-0672. My name is James Howard. Could I have a Kimberly call me? The number is 417-814-0672. Thank you. What's Mr. doing? Yep, Mr. taking off. Hims takes off. Coin just hit resistance. Coin hit resistance. 318.49 is what I got. Tesla probably jumped up big. Yep. Tesla's in my resistance channel. AMD new high. Meta called double bottom on Meta this morning. Double top on Apple. New high on Nvidia. Hey, look at that. SPX. I mean, I've done enough today where I don't need trade. We're retesting what was I said this would happen if we broke this resistance channel. We'd pull back to it. I really like to see it back down here to a double bottom or a yin yang. $643.87. Okay, prepare ye in the name of the Lord. There she is. Damn it. I'll be right back. Hello, it's James Howard. Yeah. Well, I got a lady friend that's needs a little help. And I just wanted to see if I could catch her up on one of her payments. Yeah, just one. Her name's Patricia Maclan. Is that what it is? You probably know what she is. No. Okay, is there a way you could give her a call? Yeah. The one payment up or out some? The one payment up or out some? Yeah. She said around 177 or something like that. About it was around 177. Yeah, I'll leave a message with her, tell her you're gonna call in. Give her about 5 minutes. And then call me back. I'm doing this out of the kindness of my heart. Thank you very much, Kimberly. Oh, who are you? Mayron? Okay. I've never heard of a name like that before, so it's unique. I understand. Just don't have a pow-pow on me. Thank you very much. Yep. She's gonna call you in 5 minutes to get your permission, and then she'll call me back. Her name's Mayron. Something like that. You'll be proud of me today, what I'm doing. I always say when you're doing good, you need to help somebody out. So we hit my first support, and I wanted the double bottom. If this thing's going to stay bullish, or we wait for the VWAP. So I'm going to see what the calls are here. This is a SPY. So we're in the money. You could go to 643 or 644 at 123. 644. Now I don't know if this is where we want to be, but it's definitely a double bottom at 123. 644 at 123. And this is just going to be a, oops, there it is, already down to 123 again. A little risky. So you don't want to. We got to break this yin yang. You can get out now if you like. 139, 140. We could have a bounce to a double top, to a head and shoulders, right here or right here. Either one of them. So I'm getting out. I don't want to fuck around today. Jimmy's out. You had plenty of time to take that trade because it pulled back for you. Bam, baby. There you go, 184. I'm telling you to get out early because I don't know, and at least you're in the green. Now I'm all out at 184. We went back and hit that. Do you remember where I got this from? Do you remember where I got them resistances at? I don't want you to go in these trades blindly. I can't remember where I got them at. Where the hell did I get them at? For some reason, I can't remember. I got something else on my mind, probably. That's why I can't remember. Oh, I know where I got it at. I got it from the heat map and that extension on that the body of that candle right there on that previous high that we had way back when. So the top of that heat map to the body of those candles right there where we had that tweezer top. That's where I got it. That's on the 15 minute. Let's see if we can see it on the... So it's right here on the 5-day. You got a double top right here. And then that bottom one was the heat map. And then you got a double top right here, which is a triple top break. So that could pull back right there and start another bounce. This could be a very profitable day if we just take our time. Let them come to us. I'm still running on the adrenaline that I had. Hello.
Hey.
Yep. Did she call you?
No, I called her. She has to have authorization from you to use your card. She didn't mention that the first time she called, did she?
What do you mean authorization?
You have to give your authorization that it's okay for me to have you pay
Yeah.
the card payment on your card.
Yeah, I'm giving it to her.
Yeah, but you need to go down there and sign an authorization.
Oh, fuck. Okay.
I know. I told her I don't want it. That's such a pain in the ass. I told her exactly that.
Well, you should.
So,
You want to get in her good grace.
I know, Jim, but it's a waste. You're giving her authorization over the phone. That makes no sense.
That's all right.
She goes, yeah, but I don't know who he is. She goes, oh, you can bring cash. And I said, no, I was going to do it. He was going to do it on his card. She goes, well, then he either needs to come in or pay cash. So, do you know where it's at?
I'll find it.
It's right across the street from that
Got an important message from my man here, so I gotta. I just now noticed too on this 1 minute that we took it off to 63 and the 50. And that 63 EMA is above the 50 SMA. And then when we dipped below it, the 50 crossed the 63 and had to bounce back up. So is that telling me that we're bullish right now? The 9 was above the 21. It never did broke below it. Just remember, when you get a big spike like that, it's got to consolidate. Then you got to see what kind of pattern's forming. Right now we got a symmetrical. and we got a Head and Shoulders. So it created a Head and Shoulders is what it did. That's beautiful. That yin yang was perfect. This is where I got that trend line from, was right here. It's called a yin, I call it a yin yang. Where I just put the line on the body of that candle and the line on the body of that one. And we bounced right off that resistance line from that double top. From previous. So I'm done two good things today. I told a woman that I'm not going to wear my cologne around her because I don't want her to attack me. And I'm helping this other chick. So she won't lose her car. But I ain't going to, I mean, you got to learn how to say no. Tells you in the Bible. Sometimes you can give, but then there's a time where you got to say no more. Some people don't even give. They just take. AVGO's up $9. All these stocks that I watch, they're all up. All but one, cost, and I don't even watch cost. I don't trade Netflix. Just TNX, I don't know what the heck that is. Oh, I think it's an indice of some sort. Kroger, I don't trade it much. Zim, I don't trade at all. But this is time where you got to go back on your watch list and see what's running and remember it next time we have a dip. You know, there ought to be 5 or 7 on your top watch list that you watch every single day. Nike. I bet you Nike come back and hit one of my supports. I got to leave here in a little bit. I'm going to go buy me some jasmine tea. We got a double top on Nike, so I wouldn't buy it here. You got two different supports, one here and one right here, and this is the main one, 7746. And here you go again with a yin yang. Draw your line. And hit it with the bodies, and then set an alert right above that body, right above that. And that's called a two-headed snake. That's a head and shoulders, so it come back, should pull back and hit that shoulder line, or bounce off the 9. But Nike, you know, it's not one of my favorite stocks right now. You know what are my favorites? These 7 right here. NVIDIA, Tesla, Amazon, Apple, Google, Microsoft, and Meta. All of them are my number 1 stocks. Oh, shit. My cheese chip got a little overcooked.
going to lean towards the labor market, or was he going to lean towards inflation? And he clearly, right out of the bat, saying the balance of risk appears to be shifting. And there's his pivot from inflation, which he's focused on for many months, back to the labor market. And that made yields come down, the dollar come down, and the market rally, and the odds of a Fed rate cut soared back into the 90 percentile. So it's everything you and I talked about. Nicole came right out. He went towards the labor market, and the market reacted as we thought it would.
Yeah, I mean, it's pretty exciting, I have to say. I always love when the markets really make moves, particularly ones that help people with their 401ks and IRAs, George. And at this point now, I mean, it was a dramatic move, and the Dow right now is up 852 points, setting a new record intraday high. Your thoughts on what happens in the next meeting, September 17th meeting? Scott Bessent has pressed for 50 basis points. Now the discussion is 25 or 50, right?
Well, yeah, so let's look at the market as of right now. The probabilities of increases Kevin alludes to of a rate cut in September over 90%. So the other thing is if we go back to last meeting, late August, which was a little bit more hawkish in nature, the next day we had a really bad labor market report. He talked about what Powell talked about today. He talked about the structural changes in the labor market, things like immigration. The other thing is he's talked about labor market weakness without the wage price pressures because there is weakness in the overall markets just because the supply of labor is not there, but also the demand is starting to slow. So nonetheless, obviously the emphasis now is the labor market, which has demonstrated weakness. That's tilted the policy framework to more dovish. Rates have fallen. And if you look across the board in the sector participation today, what's interesting is you're looking at the transports higher by close to 4% on aggregate. We are seeing a weakness in consumer staples, but we're also seeing strength in consumer discretionaries, real estate across the board, and also materials. So all these are cyclical areas of the stock market which are demonstrating great strength today. And even the semiconductor, the SOX index also is up close to 4% right now as we move into this digestion phase of Powell's speech, which again is very accommodative. Rates are falling, present value of assets are moving higher, and the other thing is they talked about how the policy framework is that they're basically close to neutral right now, considering just if you look at the federal funds rate right now at around 4.38% and core PCE at around 2.9%, they're already restricted by about 1.5%. So they have flexibility, and this is what we talked about, and also I think Jerome Powell mentioned this today in his obfuscated language.
Interest rates are way too high
right now, which gives them a little more flexibility to ease coming up in September.
Okay, I mean, he noted the tighter immigration policy.
And when they go back to this immigration shit, it just pisses me off because nobody should be hiring illegal immigrants. It used to be against the law. If you got a work card and you went through the proper ways, the proper chain, I'm all for it 100%, but I'm not for these heathens, millions and millions and millions coming over the border like they did. And then we putting them up in 5-star hotels and giving them free health care. I mean, we can't afford it. You got tattoo on M13 on whatever you call it, MS13 on your shoulder, on your forehead. I had to cut them off. Gotta wait for a pullback. SPY's coming up to a double top. I think it's the main reason why Trump got elected, because of the borders. Allowing that to go on during COVID. And the government's telling you to wear a mask and stay 6 feet away from people. And then they got 12 to 16 million people coming over the country. I didn't see none of them 6 feet apart. So there's something fishy about that anyway, that COVID thing. So we got a double top with a new high. Yeah, is it Mayroon?
Yes, sir.
Is that you?
Yeah.
Yeah, this is Jim again, trying to help that lady out. So if I have to come, how much cash do I need to bring? In that 177?
The payment is 165.19.
155?
165. So if you want to round it up, it'll be 166.
Okay. I'll be up there in a little bit.
All right, sounds good.
Thank you very much, ma'am.
You're very welcome.
You're located in the plaza?
Yes.
And that's the east side of Sunshine?
Yes, we're right at that turning lane.
The east side of Glennstone, I mean.
Yeah, it's where the Plaza Towers is. I can see them right outside my window.
Okay.
Right in between the Rent Center and that Academy Center.
But that's on the east side of Glennstone, right?
Yeah.
Okay. Okay, thank you.
All right, you're so very welcome. I'll see you soon.
Yes, ma'am.
All right. Bye.
She wants to break. Great news for the market. Now remember, some of this is priced in, but we've had that good pullback. So I don't know if it's that priced in or not. And I'm going to go do an errand.
Investors hedging a bit, better by more than 1% right now, above 3,400. Crude oil gaining just a little bit of ground here, up a little bit more than a third of a percent.
646.03 on the SPY. If it breaks, then expect it to pull back and respect that if it happens. We'll know any minute.
Crypto community that they'd be paying attention to the speech from Fed Chair Jerome Powell today, up by 3.75%, above 116,000.
We'll know any minute here. Could be exhausted, but this is a bullish flag. It's called an ascending triangle, triple top, quad top, 1, 2, 3, 4, and you make a little bit more. Then once it breaks, it should pull back and hit that. It should. That consolidates here and then has initial breakout. Oh, yeah. Got a rising flag here. Rising wedge.
Seeing some fear. I mean, we saw over the past week as the stock market's been moving lower, money has been moving to defensive sectors. We saw
You're a liar.
Consumer staples, utility space. We've seen the dollar even moving up. People were getting nervous and moving to those asset classes or those sectors, and that's a sign that there was fear going into this. And now today we've got a broad market rally, and those three sectors now and the dollar index are both down or up the least. So it's just, we've been seeing
Mr. New High
between various assets and sectors. This move today is not a huge surprise, and the money is showing that this should still be more of a.
It's not a huge
broad market rally, I
surprise.
think, for potentially a
Really?
couple weeks as this kind of runs its course.
Okay, so when you think about, some of the patterns that you've watched recently, the defensive flows, for instance, like in utilities, how do those signals shape your outlook for risk assets?
Yeah, so more or less, if money's flowing into defensive sectors like we've seen, once there is a pivot in mindset, once people go from being defensive and nervous to bullish, then we are going to see kind of that money come out of those sectors and pile into the broad market. And so it's actually a very bullish sign. We have some tools and indicators that show us that over the past couple of trading sessions, the whole broad market sold off into an oversold market condition. We actually saw a little bit of panic selling. The stock indices pulled back to their 20-day moving average. Now, all this is kind of technical mumbo jumbo to a lot of people, but overall, the market was primed and ready for a big explosive pop. And when we dissect the markets, I think we're going to see that fear in the market was just enough to cleanse the market. Those who are following the market so closely, who are going to get spooked out, got spooked out and sold their positions over the past week. And now they're covering, now they're buying back, they're feeling like they're missing out on the move. And you really should be long this market. I mean, you should be long it for a little while already because this trend has got some momentum. This is quite a wave that started in the market. Not just today, it actually happened a couple of weeks ago when this new wave to the upside started.
And then, Chris, I know you're watching the energy sector closely. XLE, you've been paying attention to. It's up slightly year to date, but you think it's vulnerable to a correction. What fuels that view, and how do you approach it given that?
Yeah, so this is more of a kind of a discretionary trade, an aggressive trade that when the market conditions roll over, so when the stock market does start to top out and go into a bit of a correction, that might not be for a few more weeks. The energy space has got a beautiful multi-year chart pattern. It broke down several months ago. It's been drifting higher up into resistance. And more or less, there's a massive divergence between the price of oil going down for the last year and a half and energy stocks have been going up in price for the last year and a half. And now that momentum in energy stocks have broke. And so you have to look at the stock market like the ocean tide. When the tide goes down, all boats go down. Well, the stock market is the same. When it's in a downtrend, you don't want to hold stocks. So what I'm looking for is to bet on falling energy pricing. When this stock market leg up comes to an end and starts to roll over, the energy space, you can play with an inverse ETF, which is what I'm looking for. ERY is the symbol. It has about 20 to 35% upside potential based on this pattern. Now, it's not a trade yet. I think it's still several weeks out, but it's been holding for several months, and it looks like a very good setup for it to pop and rally. So it's a very off trade, but the scenario, this type of scenario doesn't come around too often. It's like one of those trades that it's worth getting in and taking advantage of as an aggressive short-term trader.
All right, Chris. Well, we will leave our conversation there for today. We appreciate your time. That's Chris Vermillion, founder and chief investment officer of the Technical Traders. Thank you, Chris. We've got a lot more to come here on Trading 360. Next up is the Big Three: 3 stocks, 3 charts, and 3 trades. Rick Ducat goes through the technicals, and Dan Dimming joins us for the trades. On his list today, Eli Lilly, Boeing, and CVS Health. That's next on Trading 360 here on Schwab Network.
Okay, I'll be back. I gotta go do something. Take care of this chick. I'm only doing it because of the aloha spirit. So I have to wear a aloha shirt. Do 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 do. Beep. Yeah. I'll be right back real soon. Family rushes to save boat from Hurricane Erie. I gotta watch that 1 hour ago.
He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
Jenny Horny.
1 p.m. Eastern.
We're at the 50 SMA. This here will tell us where we are right now. This is going to tell us if we're going to be bullish for the rest of the day. If we hold that 50, and then we've got the second support, which is back at that hard resistance I called, the double top, and we respected it once, and we could easily come back and respect it again. But if we came back for the third time and respected it, I would expect a bigger pullback to maybe this here head and shoulders right here. And then really throw some money in the thing. So I'll be back. I don't want to leave really, but I got to get this done and get it out of the way. Could be the last big thing I ever do if the plane goes down to Punta Cana. We don't want the plane to go down, do we? What did you have it on mute all the time? Shit. Oh well. I get an F. Sure had it on mute? Okay, we're at the 63. I made it back in time.
You know, I think Jerome said it very well.
I had it on
To
mute.
add to it,
Are we going to hold or are we going to drop? That's the question that Jim needs to ask. We're going to move this up to the 200 EMA. I'm here. I'm here. Oh man, I tell you what, I get bad news all the time. Hi Jim. I'm not sure if I told you or not, but I need another brain surgery. The surgeon said I have a less than 5% chance of living though. If I don't have it, I might have 3 to 5 years. That's my best friend, just messaged me. Oh boy. Oh boy. Okay. If it ain't one thing, it's another. Whew. I was told I was going to die when I was 20, but I didn't. Okay, we're below the 63 now. I'm here. $644.94. I'm in the puts. The 646 puts at 118. Puts on the SPY. And then I'm going to clean this chart up. Actually clean it up now. Whoa, damn, what happened? Might have to stop out. Come on, don't do it. $118 and $197. Just don't. If this breaks 50, I'm gonna get out. Average 108. Breaks 50, I got to get out. Sure as shit thought we were going to hit that 644.94.
small caps, but I mean, those are companies that are very rate sensitive, and they are exploding.
The question is, do the fat cats have it right? Are we going to rotate? Shifting balance of risk may warrant adjusting policy. Well, come on. Somebody just sold a bunch of them. They're buying it. Look at that tape. Somebody's buying it. The way it keeps acting, it's going to act like a spring and boom. Right now I'm down $80, $60, $40, $20. So we got a head and shoulders now. And that 63 is acting like the shoulder line. So let's see if we faked a bunch of people out here. I'm even at 108. I see a big old knife to the 200. Replace. Come on, drop. See, this is a shoulder line. I should be bullish right now. So I might look at the calls here. Calls are cheap too. Do a straddle. Kind of been sideways for a while. Well, it seems like I'm risking it, risking the biscuit. We're at 110 now. Let's get to 120. Let's drop on down to the support level. Like. $6.45, the 50-cent drop.
To Powell's speech, expecting more hawkish tone than maybe what he came across. And I'm not positive that it wasn't hawkish, because there were a couple things that, even though he did set up the likelihood of a rate cut and talked about balances, he also talked about changing the lower bound as well, too. So there's a lot of things that I think, you could interpret either way if we dovish or hawkish from that speech. But I think we are at
a bit of an inflection point here because, as you guys mentioned, we're starting to see some of that economic weakness. It is starting to filter through, but yet we have markets at all-time highs. So something's got to give along the way. I think as of right now, if you look at the markets, there's definitely dip
Always
buying,
clean as
there's
Jim. May I help you?
strength on when the markets pull back.
Hello? You don't want to piss me off. I'll sick funky after you. We'll sing it together next time. Singing, not missing. I was going to ask her who that guy was. Bless her heart. God dang, man. Death. Is today Death Day or what? Oh my. A friend of mine's husband died yesterday. Okay, well, I was up a little bit, to $40. I'm about ready to give up on this trade if this thing don't do something soon. And it could prolong. I mean, right now we're in downward. Let me see. We could bounce up. And we could bounce down. And watch me if I sell. I got in it and the thing popped. Watch me sell it and the thing drop. So I'm just going to hold it. I'll take a $100 loss if I have to. There's 118. All right. Just one more fat candle. There it is. I'm out. I'm going to get out. That or hold it. 127. I'll take that. If we can get down here, and that'd be another 10 cents. Anybody take the Bobo? Because I'm going to think about getting out of this thing right now. Then we'll have a big run to the downside, and then I'm gonna go, shit, it's at $4 out at 131. Yay! That's how you do it. Trade number 3 today. Anybody take the put on me with SPY?
A bonus here for the tariff talk also. But Joe, anything else that you're focused on?
So the Asian woman told me, "You're too chicken for that." Edge did. He's got the edge. I'm out. And it could drop more. There it is right there. What'd I say, 10 cents? And it sure did. So this is a support. If it wants to stay bullish, it has to hold. If not, man, you're going to score big time. So I'm going to ask you a question. Do you like how I explain my trades? I want you to learn. Where's John Smith? Did he show up today? John Smith said I was weird. I'm going to write a song about John Smith. There we are, right there. 150. I just left $200 on the table. John Smith was a trader's man. He spoke to Jim. He had one thing in a plan. He said, "Jim, you're a little strange. It's fun when you're deranged. Jim, you're a little strange. 164, oh no, I just left $300 on the table. I could have held a little longer." So John Smith was hearing me play, and he said, "I get sick and tired of listening to that today." John Smith, John Smith, John Smith, John Smith. And then I was getting some news that a girl needed a loan. She called me on the phone, and I told her I would help her if I had no choice. You can listen to me sing in that lovely voice. John Smith. He's one sick dude, ain't he? I'm a one of a kind. I'm called the singing day trader.
Time, Tom. I don't know what it is, And eventually, the enthusiasm for AI and all things AI is going to weaken or deaccelerate. And I don't know when that is, Tom, but I've been through a couple of these bubbles, and so have you. And we know
calling it a bubble, huh?
And it comes when you least expect it. And
We've been in a bubble for 4 years. 5 years now. So now he comes out and calls it a bubble. I don't think it's a bubble. But I've heard 21% pullback. So if I were you, I don't think I'd be wanting to swing, just scalp and day trade. And hold a couple ones that you really love, but I feel like we've been in a bubble for a good 3 to 4 years. One, because we printed all that liquidity, over $14 trillion over budget in 4 years, which is the biggest bubble I've ever seen. So I just got to be very careful. And if we do have like a good 5 to 10% pullback, I'll be able to run it up 4 or 5%, 6%. Some of them stocks will be, options will be like 200 or 300%. But he's the first one I heard bubble. Bubble. So what do we do when we trade a bubble? Real estate is in a bubble. The internet stock.com era had a bubble.
Affirmative.
The pot stocks had a bubble.
Affirmative.
My right tit has a bubble.
Frankly, my dear, I don't give a damn.
I didn't think you did. Let me hear that again, please.
Frankly, my dear, I don't give a damn.
Sounds just like Richard Nixon. What else had a bubble? The internet.
And trade with me.
Oh.
Can't afford to make much more.
Did we pop? No. We had the real estate bubble. We had the dot-com bubble. Now they're calling about we had an EV bubble. We had a pot bubble, EV bubble, internet bubble, real estate bubble. So I think that's the only bubbles. And we had the Bitcoin might be in a bubble. But we did have a bubble and it bursted and it pulled back real big. Now it's back up there at the top again, but a lot of them stocks, just if you just mention Bitcoin, they would run. These were pennies. to 10,000, 20,000%. So that's a bubble. I'll probably come up with another one here soon. I don't know if you want to call solar. What was that? What's some solar stocks? I think they had a bubble. What was it? I don't even remember any of the names anymore. First Solar, FLSR. FLSR. No. F first. Oh, there it is. FSLR. FSLR. One of my liberal friends was whining. The government's not funded for solar anymore. And it had a bounce. So it didn't. That was a good missed opportunity right there. Damn, I don't even want to look. 165. Edge, are you still in them? No, sir. Crypto. Yep, crypto bubble. That was the Bitcoin bubble, I guess, is what I did. Honey, I was sitting here watching Jim, and he called out this put, and I asked him, I said, Jim, you're down 95%. Have you ever thought about selling? And I said, no, I can't. No. Then all of a sudden, a big wind came, and from the sky, they said, don't sell, Jim. Don't take the loss. And the next thing I knew it, we were up 30 cents a contract, 30 bucks a contract. Dumbass sold it. he could have made another $300. Jim, you were up 20%. Did you think about selling it? I said, well, yes. I sold it. Yes. Jim, now it's up 70%. Do you regret selling it? No. Yes. No, yes. Ain't that funny? You're hilarious, James. Edge says I'm not funny. Edge, you don't think I'm funny? He says nope. I'm hilarious. Well, I'm gonna go. I gotta talk to my Asian girl up there at the store where I get my jasmine tea, and she told me just take a little pinch and put it in boiling water. And I didn't ask her how long I should let it sit, but I've been putting a whole tablespoon in and letting it soak on green tea water, not boiling. I like it that way. So I'm going to go in there and attempt to make some of this with boiling water and see how it tastes. I'm just going to use a pinch, and I don't know what a pinch is. It's probably a lot less than a tablespoon. So we bounced off the bottom of that there support. Sorry. I don't know if I'm going to have enough energy to take this vacation. I just don't have the energy I used to have. Probably be sleeping a lot on the beach. I don't want blue. Let's go yellow. A bright yellow. Wonder what color would go with blue. Purple. Okay, we're at resistance here. Do I want to buy a put again? If you can count to 3, 1, 2, 3, you can trade with me. If you can count to 4, 1, 2, 3, 4, you might make a little bit more. So it has to break out here. So I wait. Again, 1 bis, and we pulled up 2, freebie, 4 bis, 1 2 bits, freebie. So this is the sweet spot. If it doesn't break here, I think we can pull back to this. And I'm going to bring that up just a little bit because I want to get ready to buy a put here. I heard Hickey say bubble. So where are these at now? They're at 137. Shit. That's not cool. You gotta watch that tape. And I've got level 2 up here. Now there's another level 2 you could use. It's called the bats at edge. That says 646. We could bounce a buck here. And 642.22. And we could drop 60 cents, 50 cents. What happened to them? 647.50 all of a sudden. They want more out of it. So they think we're going to bounce. And that's how I use the level 2. And people are wanting to buy it cheaper if they can. So now we're getting a reasonable price here on the puts. $113, I missed it. That'd have been perfect. The 646. I'll be right back. I gotta get away from here for a second. I've had so much bad news come around me today. So they got it set for sell at a buck, up a buck. These want to get out of it a lot sooner. 646, 645. 90, 645, 60, 646. Yeah, it's a little confusing. Well, that'd be a good trade. The puts 113 to 116 to 140. Tesla boom. Tesla just hit my, I had 337.73. I'll be right back. Thank you. Broadcom coming up. God, the Dow Jones up 900 points? Are you kidding me? I'd say we're going to pull back. I'm going to do this experiment with my next glass of tea. So I had 641 to break, and we really broke above it. Long on SPY. Oh, we pulled back to that support level. I like my way better. Check to see when my fanny pack's coming in. Probably won't get it till tomorrow. It says it's shipped right now. You're seeing the same order status information that our customer service association can access. Package left the shipper's facility. Dang, puts her at 150 now. Okay, we're at the 200. We'll see if the 200 holds.
To pay nearly $600 a month to keep my health insurance. I was at my
Live, President Trump makes an announcement. We're at the 200 right here, so this has got to hold. We got 1 week until I take my vacation. Announcement, announcement, announcement. Uh-oh. God, 185 now. And we're still above the VWAP. So your next support's going to be right here. The video response reports that the H20 GPU for China is ending production. They don't taste too bad. This pretty fast bounce back up. 185 to 131 on the puts. SPY puts. It's 1 o'clock. There we go. Get ready. One point, there it is, right there. Try to get 114. 115. There we go, right there, 112. Now, if we break out, I'm in trouble. Ooh, that's a pretty chart, Living Goose. Look at his chart. They're prettier than mine. I don't know if I can put up with that. I might have to ban you. No, that wouldn't be very nice. Come on, I want to see this thing drop. You know, don't. Might have to stop out. If it goes to $1, I'll drop out. If it goes to $1, I'll drop out. falling megaphone. I'm sitting here all alone, and it breaks out, and it breaks out. I can't hold this much longer. It's no longer in my zone, and it breaks out, and it breaks out. Why do you do that to me? Why do you do that to me? It's a falling megaphone, left here all alone, and it breaks out, and it breaks out. If John Smith was here, I'd ask him for a can of beer. John Smith, can you hear? It's a falling megaphone, and it broke out. It broke out. I could have had it on right there. If John Smith was here, I'd buy him a beer. I'd buy him a beer. Let's drop to the 200 SMA. It's a falling megaphone, sitting here all alone, and it broke out, and it broke out. John Smith was here, I'd buy him a beer. John Smith was here, I'd buy him a beer. I'm back to even. I'd like to get it down, and it broke out, and it broke out. God darn, man, it was at 114 and all of a sudden it's at 104? Shit. Well, heck. Got some major volatility. Oh, there it goes. Shit. I'll give it a few more minutes, but we definitely had a nice little breakout there. Mega. How can you play music in a time like this? If you only knew that my hands were sweating, I'm gonna wear blisters to the bone. Let's have pull back, pretty please. Baby, I will drop to my knees. Okay, well, I'm about tired of this. I think we are going to go higher. Another big fat candle on this here going up will really hurt me here. There's really nothing here, just little bitty candles ain't saying much. Put VIX falling, puts won't work. Well, give it a few more minutes here. Is anybody else in the puts with me? Update of the Trump White House. Well, need to make a business decision. Come on, Caroline, I need you. There's Jenny Horney. She must have had her back broke or something, the way she leans back like that. I think I got to get out of these things or do something. Somebody bought a bunch right there. God, look at that. So I've got 5, and if I buy 10, what gives me? Give me 86. If I've got them at 74. We could go higher. We could hit a double top. Another 60 points. Okay, I want to go for it. I'm doing that late hour thing again, which really doesn't work for me. Anyone else in these? Just me? Oh, Johnny. It's not looking too good. We're going to have to make a decision. Yep. On the 15-minute, we're at resistance right now. Right there. Really can't go much higher. We got to do something. Yeah. Damn candles are so little bitty. I think I gotta get out or this tape looks pretty good. We're at the 21 right now. If that breaks, we'll drop and hit the 63. It's got a lot of volume. I'm watching this tape, see how many big blocks. There was 1,000 bought there. Find somewhere to put this burger. Getting ready to squeeze again. Okay. Might just have to cut it. Just retested its new double top. With a lower high. 646.21. Tempting to just go for it. Add 20 right here at 54. They give me 25. That'd be a little over $1,000 added to it. And that'd give me an average of 73. Be more than that. Be less than that. That'd give me 65. If I got 20 of them at 54. There it is. Should we do it? I have my chance right there to get them. I just want to see it drop below this 21. And this tape, right when you get about to where it's going to do it, all of a sudden they go green. Lots are getting smaller. There's a 1351 right there. If it breaks out, I could really be in. Getting ready to squeeze again. Boom, there she goes. I knew it was getting ready to squeeze again. Well. Anybody cut? I'm gonna give it a shot. I wanted to do right up there and I didn't do it. Now I gotta wait to see if it doesn't hold the 21 or this trend line. If we go below this trend line, 646.10. Well, that would have been a gift. 0.43. That have got us to 56. If I'd have bought them at 43, 20 of them. We're at support again. We're going to find out. Here's that flag. That doesn't hold there. We start to drop. I'd be almost even right now if it would have took 20 at 43. There's 3 black crows with tweezer. So this is an important pattern right here. Damn it, I wish I'd have got them. At 43. I'm gonna go get me some water. So I don't like being in these puts so late in the day, on the same day. So we need some fast action. That'd have been the sweet spot right there. I'd have probably sold them at 56. We'll get some water. Do. We're at the double top. I'm going to give it a shot. This is at my risk. $0.46. You're right. Vegas is right too. Me and Vegas are competing. Now I want to see a drop. Did you hear that, Ringo? All rounder. I added there. Right now I'm green. Oh yeah. Now drop more. Ringo. Rounder. Did you hear me?
You're pushing your luck, little man.
What's that? Somebody say something?
You're pushing your luck, little man.
Yes. If we drop below the 200, I'm going to be rich. Or I get out now. Johnny's out with small profit. What about you, Rounder? You got your ears on? I want to see us drop below this 200. Whoop, I was.
You're pushing your luck, little man.
Let's see.
One of us has made a gross error.
Not yet.
Danger, danger, Will Robinson.
No, not yet. Oh.
Nothing for you.
Okay, I got 25 contracts. At 60 cents. Come on, baby. I ran it up to 60. I don't see it squeezing. It's kind of squeezing. It's still under the 9. Oh, yeah. Somebody just cut loose there. What the hell caused that? I went so fast I couldn't tell. There, that 65. We'll hit the 200. So that's descending now, which is bearish. That's exactly what a descending flag is, but rate cuts was good news. I'm going to stay in it. I'm just going to give it a little bit more time. Because if we get one more, I mean, we're at the 200. I should make a business decision right here and just get the frick out of it. There's 76. Oh yeah, drop, 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 drop. Okay. We're going to start buying it again. I see one big fat candle. We got a tweezer bottom with 3 black crows. So, I mean, this is a buy signal. We're under the 200 though, so I'm gonna hold it just a little bit longer, unless we start to break above it, which we're trying to do right now. I mean, Rounder, are you still in this? Yes or no? I got the big balls. Paging Jim All-Rounder. Hope you didn't take any Valium and fall asleep. Drop, 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 drop. Back at 72 right now. Should I sell this or hold it longer? That's the end of my story. Jimmy, Jimmy. The crowd's going wild at the sports arena. I'm going to sell these suckers in regret. Paging. Okay, that was my second chance to get out of the trade. Paging all-rounder. Are you alive? I can't get his attention. Sold some at 72. Not all of them. If we start to move up here, I'll get out completely. I wish you would answer. Jimmy's about to take him an aspirin, Jimmy's about to take him an aspirin now. Come on, get down to 645. We got a descending triangle. We got a 1, 2, 3 here. So we're getting ready to squeeze again. I don't know which direction. Right now we're under the 200, so it's kind of bearish. And we got two spots. We got this one here. And we got this one. Go. One, two, three. It's either I sell now or wait, and I'm gonna wait. You got the nerve, you son of a gun. Watch and learn, Ringo. You'll be my Huckabee by the end of the day. Balls of steel, that's right. When you've been a gunfighter like me, I'm the guy that shot Jesse James. Was it Howard that shot Jesse James? Well, he got stuck in the puts and held him for a while. We're squeezing again. I don't like this. We're bearish because we're under the 200 and the 9. We got a descending pattern. We kind of broke out of it a little bit. So I have to know the odds here. I should go ahead and sell it, just forget about this trade and move on. But I can't get Jim All-Rounder to answer me. I'm going to give him a spank. 84. Jim All-Rounder gets a spank award. $0.79. $82. Yes. $0.88, baby. 91. I've got balls of steel. That'll be my next song. Shall we have a sing-along? This is so sweet. I'm gonna sell them all now, doo-dah, doo-dah. Champtown races 5 miles long, oh, doo-dah day. Gonna sell all my calls, all my puts. Gonna sell my puts. I got out at 90 cents. Everybody bet on the bay. Take a deep breath and say, thank you, Lord, for all you've accomplished. I'm going to give myself a B plus for sticking with it, buying the perfect bottom out. Oh. That was a tense moment in my life. Very tense moment. And we still can drop. I'm thinking 645. But we're squeezing. We have a 1, 2, 3 bits. Oh my gosh. See the wedge? 1 2 bits. We hit here, and we hit here. I was thinking maybe that was just a little bit too much and it pulled back. It still might. Because it's got one hell of a wall to break. Now, if these people are still stuck in here, I mean, there's a lot of buying going on in there. Don't you agree? Magnificent. B plus for strategy. I mean, I was almost down 95%. Jim, you were down 50%. Did you ever think about selling? Yeah, I did. Yeah, I sure did. I know there's a song that needs to be wrote about that. Ain't that right?
You're down 95%. Have you ever considered selling?
No, I can't. That's a... no.
You're down 95%. Have you ever considered selling?
No, I can't. That's a... no.
You're down 95%. Have you ever considered selling?
No, I can't. That's a... no.
It's a no, but I did it. Did you call that irrational exuberance? What a day. Oh my gosh. I started going to the tanning booth yesterday. I hope that helps so I won't get so burnt. Last time I went on vacation to Mexico, I got back on the plane and I started feeling whelps on the top of my head because of sunburn, blisters. So this time I'm going to be wearing a hat when I'm at the pool and at the beach. I want to buy me a beach hat. Does anybody have any suggestions? Michelle? Is she here? No. Edge, did you like that trade I just made? I wish I could get Jim to answer. Jim, all-rounder. Starting to upset me. Four, four, four.
him pointing to this idea that the tariff impact, really the base case, was going to be more kind of one time.
I don't want to hear about your damn tariff talk. All this is going to do is give these corporations reason to raise your stuff up. But they didn't complain when we had inflation to 30-40%. I got still paying for merchandise that doubled on me. Average is about 22, 25. But that happened during the Biden years, not during the Trump years. They've been steady, my supplies have. So far. Well, I don't know if I want to trade anymore or not. We're at resistance here in that triangle. And if I still think we're going to hit 645, I should jump in it. Let me see. I'm going to do a paper trade to 646 at 75 cents. Paper trade. Puts. Or actually, let me look at tomorrow. Yeah. I'll go the 645s puts at 137. Nope, 133, just like that. Down $4,000. After the rally, after Powell's Jackson Hole speech.
And he has agreed that they would take a, Intel has agreed to allow a 10% stake, but the president is not.
That's Vegas.
They don't want to sit on the board or anything like that. They're looking to unveil an Intel deal for an equity stake, but they do not want to be on the board or anything like that. So we'll see what happens with that announcement, and it might be announced today after the close or during the market hours. I have no idea. All I can tell you is that Lip Bhutan is currently at the White House right now meeting with the president. So stand by for some potential Intel news as well. And as you can see as I'm speaking, Intel's ripping as well. So pay attention.
How do I get out of this thing?
On Intel.
Let's see. I'm going to turn it off.
Watching it close here.
See, I bring excitement to the space show. Come on.
Yeah, I love it.
Look
at that, breaking the highs now.
Making guys money. Look at this PDD. I mean, those are going to go to 40 cents momentarily.
No.
Tesla's ripping.
Shut the fucker
PDD's
off.
ripping. Intel's ripping. I mean, Intel to me, like until the president make.
There I go.
For your portfolio, the watch list. We'll be right back.
Oh boy. My God. You see where the puts are on them things? That don't make sense. Oh, what? How can they be at 170? Something ain't making sense. Oh, that's the next day. Okay. Let's trip it out. So how did that be? Was there at 146, 176, and what? It can't be. I want an A plus, please. I'm going to be right back. Okay, well, shoot. That was a toughie. That kind of threw me off there. I'm glad I held on. I mean, I told you there's many times I was going to take a loss. I had 5 contracts. I mean, it wouldn't have it been $250 when I decided I was going to sell it, but I held on. So actually, that was pretty good. $600 and some. Kind of shook up after that trade. He's doing the straddle. They raised the price on my jasmine tea $1. I'll show you what I got. While I was out, I bought me bags and jasmine. Called Joy Luck. It's leafy. And I love it. I didn't like it at first because I wasn't cooking it right. So each one of these weigh 8 ounces. And you go online, it's $20. $12, $20. But I got it for 8. Not counting tax. But I should have bought a bunch of them. I bought 2 of them. Might go in there and buy a bunch next time I go in there. More than that, like 6. Because I want to have it. And I don't want them to run out. But as long as they keep buying it. For hot tea, warm the teapot first, then add proper amount of tea leaves together with boiling water, then empty the water and pour boiling water again. What? Warm the teapot first and add proper amount of tea leaves together with boiling water, then empty the water and pour boiling water again. Oh. Warm up the teapot with boiling water and pour the water out. No, warm the teapot first and add proper amount of tea leaves together with boiling water. Then empty the water and pour boiling water again and wait 3 to 5 minutes to serve. The tea may be infused 3 or 4 times. Warning, cancer and reproductive... What? Huh? I don't know if I like the sound of that. Intel moving. It's one of the biggest volume, and then we got Nvidia up $3 today. Tesla up 1880, 6%. Oh. What? What was that? Oh boy. AVGO's pulling back. Are we going to have a flush at the end of the day? Rob? Funky kind of pooped out on us. Where's Funky at? Now I have to rely on Rob. Watch puts, he says. We're going to know here any second. We got the 200 EMA. If that goes, let me see here. What time is it? It's almost 4 minutes to power hour. So I would look at maybe even the 6460s. What do you got? What are you looking at? 6460s, yep. I'm not in them yet, but I'm going to look at them here. Haven't traded these all day, so let's get on it. Pow did it. Ladies and gentlemen, I'm looking at the 6460s at 95 cents, if I can get it. And we're going to try to get this down to number 123. There it is. 95, come on. Yeah. Okay. Now if this doesn't work, I get out. $64.60s at 95 Lotto with SPX. I can't wait to go to Punta Cana. I'm gonna have, what do you call it, a fondue? Has anybody ever ate fondue before? Loot. How did Loot get on there? That's funny. Uh-oh. That didn't turn out too hot. I'm trading the Ludos. I don't know. Fuck, how did that get there? Rob. If I was on the front lines, I sure wouldn't want Funk around. Did you hear me, Funk, if you're out there? Is chapstick a good thing to take with you when you expect to get burned up by the sun? Because I got some real sexy stuff here. It's called Lip Smoothie. Juicy Lip Balm. I was at 105, 110 there for a second. No, don't. Don't break it up. Now it's setting up in a triangle. Come on down. What? Open.
You're down 95%. Have you ever considered selling?
No, I can't.
Can't.
That's
no.
a no.
It's a no. You're down 75%. Have you ever considered selling? No, I can't. It's a no. Are we going to break the 63 EMA and you're going to bite your tongue? I hope not. No. No, I can't. I got to speak. You're down 25 cents. You're down 20 cents on a contract. $20 a contract. Have you ever thought about selling? No. Yeah, I have. Oh, God. All of a sudden you turned around and you're almost even. Are you going to sell it? No. I want a knife to 64, 65, 92. Come on now. Let's go. Give me $1.50 contract. Give me $2. Uh-oh. Uh-oh. Should be a lot bigger drop than that. Come on. Fudge. I don't know. frickin' dollar. I don't want to get out of them because they didn't move hardly. 75 to a buck. $1.05. Jim, when are you going to get your fanny pack? Soon, I hope. I hope real soon. Shipped. So it's shipped to the thing. I doubt if I get it until tomorrow. They lied. $120, baby. Let's do it. It been a hard day's night, and Jimmy feels alright. We got a double bottom here. I want to get out. I want to get out. Come on. There's 120. 120. Randy. Did anybody take the position? Because I'm out. Come on. I'll take it. 125 would have been better, but... Whew. La 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 la. La 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 la. There's my 125. Whoa, shit. 135. Yep. Here I did it again. You coward. Don't even want to look at it. Look at that. Target hit the 200 EMA. I'm going to go have my tea made because I will be going to the tanning booth. Bingo. I think we'll accept that. I think a fanny pack can come in very handy. Oak. Bam, look at there. Wrecked it. The guy's showing how size of his. What's this here? Who is he? I don't know if I can tolerate that. There it is, right to the 200. Nailed it. Nailed it. Oh. Deliveries on the 23rd. I got to pick it up on the 23rd. I don't like that. Now where are they? They are at still $1.15. So I should get closer to the money when I do one of them, Rob. Should I get closer to the money? I was 2 notches out because these didn't really move that much. Yep, I agree. The other ones are up. I got out of them, but I noticed the other ones went to like $3 or even in the money. So now I won't get them until tomorrow. Oh, I should get them today because that's... I'm so confused. We have 35 minutes left. Excuse you. I only made 4 trades today. It's about half of what I usually do. We just held up there for so long. There's really nothing I could find. I mean, kind of sucked. Now what's that? It's strange. Just small candles all day long. Well, the puts went to 145. What? Look at right to my trend line. Look at them puts. Golly, 235, 250. Yes. I think we did good today. Although getting stuck in that. It'll be peace in the valley for me. It'll be peace. I was right. My hunch was right. I want some. Hey, I want a grade. Look how pretty that is. Ain't that the most prettiest thing you ever saw? Say yes. So I'm not going to get my fanny pack until tomorrow. I wanted you to see how excited I was going to get. They're at $4.30. Damn it. I was in them suckers at 95 cents. And they're at 4.80. You know how much profit that would have been? You're right. Almost $4,000 for a measly $1,000 trade. Did you hear that? Rob's got me addicted. I'm addicted, Rob. Rob, do you want to buy me a fanny pack? One of them fancy ones? Johnny Ringo's going to buy me some, what do you call them things? Why? I'm looking at excursions. I don't know if I want to take one on such a short trip. Dune buggy, I'd get all muddy. Now horseback riding I might do. I think that would be fun. Congo Bongo nightclub party in Punta Cana. And I'm thinking it might be connected. Punta Cana boat snorkeling with music DJ. All kinds of stuff to do. And I'm wondering what this Congo Bongo nightclub is. $125 for that one. I don't know if I want to do that. Premium entrance, premium drinks. Yeah. That'd be about $173. I don't want to do that. VIP front row for $263. Now this looks kind of neat. Scuba Doo, explore the ocean of Punta Cana. With my luck, I'd probably leak. I think that'd be neat. Might do that. Nice reversal. $2.60 for the 6465s. We just hit resistance levels. Next week, I'm going to talk about how to YouTube. I'm going to be talking about how to use my moving averages. That's going to be the main journey. John Smith said I had too much on my charts, and I'm going, what the hell are you talking about? RSI and a few moving averages, is that too much? I appreciate you, John Smith. You don't know who you're talking to. I'm Washboardjim, one of the best chartists around. Right there to the 200. That's an exit idea. 9 minutes to go. Either one of them would have been an exit idea. Now you got the 9 crossing the 21. That area, that 200 EMA or the 200 SMA. But that wall would have probably where I'd have sold it. John Smith. I want Caroline back. The guy sent me a video of Caroline. It'll be peace in the valley. Back to the 200 in the last 5 minutes of trading. Boom! Tesla. Boom! Investors sue Wall Street as Tesla faces security fraud allegations. What? A class action lawsuit was filed on behalf of investors who lost money as a result of alleged securities fraud between April 1923 and June 25. If you suffered a loss in Tesla, don't say stay silent. That's bullshit. It wasn't his fault that the media was cracking down on him when he bought Twitter. I don't know. I don't see how you could sue somebody for losing money in the market if you're the one that's in charge of yourself. You're the idiot that held it. You didn't buy the dip like Washboard did and sell it at resistance when it hit 500. Yeah, I want to watch illegal influencer deported after flaunting benefits. So they're painting the border wall black. Time to catch up on news. We got 1 minute left. It's been I think I played it out pretty good. Besides getting stuck in that put and then coming out okay, but I called it a little bit too soon. All in all, it was a real good day because that first trade of the day, man, that really, I couldn't beat that. In and out of a trade within a couple of minutes and make 2x, almost 3x of what I usually do. And that was a hunch, you know. I got jumped in it before the news came out. I just felt more comfortable in the calls because I kind of knew what was going to go down. And I waited for the pullback. I think I played that perfectly. And then I jumped in and thought we were going to have a pullback earlier in the day, and we just kept going sideways and then going up and up and up and up and up. And watched it go up and down there for a little bit, and then decided, man, if I'd bought them last time, I could have got out even. And then it went down again. And the same thing happened. Then it went down again. I said, I'm going to get them this time. I mean, they went up. The market went up, but the puts went down. So, yeah, that was I could have got lucky, I guess. But I knew there was going to be some kind of pullback. I mean, it was just overdone. So, let me go out and get some exercise. I worry about my legs, my knees, sitting here all day long. I get enough exercise at night, but not enough. So, I think that's about it.